bones. So eating protein in the morning provides the body the materials it needs to function all day long. Protein also keeps you full, boosting metabolism and calorie burning, so it's a fantastic way to promote healthy weight. However, not all protein affects the body the same way. It's really the kind of protein you eat that's important. The problem is the healthiest sources of protein are not what most people think. Let's put this to the test. One of these foods helps you manage weight. One of these foods significantly reduces food cravings. But one of these foods has been shown to increase the risk of heart disease by 20%. Do you know which is which? My name is Dr. Stephen Gundry, and I made this video to give you a quick protein quiz that could actually change your life. Because eating the right protein can help you manage weight, get stronger bones, and even help protect your heart. It can also help reduce digestive discomfort and give you smoother, more regular bowel movements. It can boost your mood, support brain health, and even help support healthy blood pressure and blood sugar levels. And of course, good protein fills you up, helping stop food cravings in their tracks. By making this one small change to your diet, you can experience profound benefits. Benefits I've seen in thousands of patients who finally got rid of health problems that have been nagging them for years. And changes I've seen in myself every day when I look in the mirror, including losing 70 pounds of weight and keeping it off for 20 years. Because I do this simple thing every day, and at age 68, I've never felt better in my life. There's just one problem. Millions of Americans are eating one specific protein. Even worse, many people are eating this every single day and have no idea it could lead to heart disease, stroke, and even cancer. This has become a major health issue in America. So in the next couple minutes, I'm going to reveal to you truth about protein. I'm also going to reveal the one food that, in my opinion, we should all stop eating, because studies show it can increase your risk of heart disease by 20%, and it's in millions of Americans' refrigerators right now. I'll also tell you the stunning secret to a slimmer, stronger body that I learned from studying horses. Yes, horses. I'll also reveal the simple protein hack you can do just a few times a week to boost your energy, manage your weight, improve digestion, and achieve the whole body health you deserve. And no, getting slimmer and healthier does not involve giving up meat. In fact, you're about to learn that some meat is actually healthier than certain vegetables, and that the key to a long, healthy life really just comes down to one easy, simple-to-do protein hack. Again, my name is Dr. Stephen Gundry, and I'm a cardiothoracic surgeon and double New York Times best-selling author and nutritionist with medical practices in Palm Springs and Santa Barbara, California. I graduated with honors from Yale University and received my medical doctorate from the Medical College of Georgia. I spent
day and night, the lonely stoner seems to free his mind at night. He's all alone through the day and night. The lonely loner seems to free his mind at night.
All I Yeah, I was looking at all products.
Oh, snap. All right, I'm going to turn the volume down here just a little bit so I can still hear you, but not overpower. All right, cool. And for those of you on my side, I don't think you can see, I can't see your viewers' comments and you can't see mine, but we're live on YouTube. It's Alpha Day Trading. We're going to have our charts up. We're going to have some members and some individuals just on the mic, and you could pick their brains, ask them questions, ask me questions, get live examples. I have a few things I'd like to discuss today that could be of value. And just again, make sure you have a notepad, a pen. If you guys want to learn how to trade stocks and you have questions, make sure that you're answering those questions, writing them down. And today's going to be, maybe an hour, 2 hours long. And again, you guys are probably going to learn a lot today. Yo, what's up inside the chat? Are we actually live in chat now? Hey, we are. What's up, guys and girls? How's it going? So, yeah, we're just now live inside of chat. So what's up, Kevin? What's up, Steve? We got Steve and Kevin up in here. Corey's in here as well. He's like, today's going to be a boring day. The market's closed. I feel you, dude. I feel you. I woke up today like, I'm ready to trade. I'm like, no, the market's closed. Yo, Nick, J. Doss. What's up, guys? Morning. Top of the morning to you. So let me give you a quick little breakdown on kind of what is going on right now, right? So right now, I am doing a duet on TikTok with Cole, so you can view us there. We don't have anything structured or planned. I have a few topics I'd like to talk about today. But with that being said, I'd like to, again, answer some of your guys' questions. If you have any questions for Cole, you can do the same exact thing. Ask him a question. Here in a second, he's going to be jumping on the stream for you guys. So you can watch us on TikTok. You can watch us on YouTube. Again, my YouTube is Alpha Day Trading. If you want to see my charts, I'm going to give examples. You want to see my beautiful face, and you want to see other people as well if we bring them on the mic. You guys can do that as well. And if anybody wants to jump on the mic and they want to share anything with traders, what's helped you become a consistent trader? What started to click? Just anything like that, right? So it's just completely open for the next couple of hours. Again, I don't really have a structure or anything like that, so we'll just kind of wing it and we'll see where this goes naturally, and we'll have some fun with it. The whole point of being here is to continue to drop those value bombs like we always do and just get you guys educated and try and help you guys out the best we can so you can start seeing success and seeing profits in the stock market. All right, so so join us on YouTube. I would say that's probably the easiest thing if you guys want to see like the charts and see other members and their webcams and all that stuff if they do jump on. I would say YouTube's probably going to be the easiest because we have about 3 different chat feeds we're looking at. We got TikTok, YouTube, and chat. So it can be a little overwhelming. The last thing I want to do is forget that we're live on TikTok and miss your question. So the easy thing would just be join us on YouTube, guys. Or here. It's up to you.
Thank you. Gonna go to YouTube. Maxoid's coming over.
Come on over, Mexoids.
Oh yeah. So what were the few topics that we're looking to talk about today?
So a couple things. So, things that I wish I did differently as a new trader. Things that I think that if I would have done differently or didn't do it all, I feel like I would have found success a lot sooner and lost a lot less money in the market. And I think that's important for anybody that's even in the market for 2 years, 3 years, 2 days, 3 days. It doesn't matter, because if I would have done these things differently 2 years in, I would have saw success a lot faster. So I have a few things I would like to hit on there, and I'm sure you have some things that you would, kind of hit on as well. And then maybe we talk about like the 3 most popular strategies for brand new traders that are super easy to learn, super easy to master, that they could add to their playbook and just focus on those 3 setups and those 3 strategies, and back test them, get to know them, and then again apply those in a real-time market in a real account, right? Versus chasing stocks and FOMOing in and trying to buy breakouts and getting caught up in rug pulls. Just simple setups, simple strategies that anybody can master. And if you just focus on those 3 and that's it, you could be successful consistently in the stock market. You don't need to know 20 strategies. So.
Yeah, and it's about how you apply yourself to that strategy. Like, for example, I trade the bull flag, but I don't trade the bull flag as a strategy. I trade the buying pressure that comes with the bull flag. That's what I look to trade. I apply myself in that way, and I use that strategy in a certain
in your unique way. So you have a bull flag. You look at a lot of, volume price analysis and price action and things like that. So you're taking the concept of a bull flag, but you're trading it differently, and that's your edge, something that you've crafted that works for you. Yeah.
I don't think I trade bull flags necessarily because
I don't
like trade. I mean, I guess you could call them, well, they would be classified as a bull flag, but I don't call them that because I don't like to trade just the patterns. I want to trade that buying momentum coming in.
Right. No, absolutely. Yeah. And like with me and bull flags, I don't trade flags unless we see the consistency in the market and like market conditions giving us flags left and right, left and right. But if we're just in a general market and the market's kind of just normal, it's not super hot and we don't see those consistent patterns, playing out every day consistently, I don't trade flags because you're buying at high a day. You're buying at a level of resistance, and we see way too many false breaks out of these flags followed by those nasty rug pulls. So, I mean, if you are a new trader that can't watch the time and sales and read the tape, right, and you don't have an idea of price action, for example, you could be the one getting caught up in that big rug pull, halt to the downside, and then what? Now you start to become emotional. Now you're panicking, and now you're scared, right? And you're like, oh, what do I do? And then you make wrong decisions. You start averaging down to get a lower cost basis, hoping it bounces back up, and then it doesn't bounce up, and now you're down even more just to add even more to the point where you're like, you just can't handle the loss. You cut it, and then what? It rips, right? And you're like, It's always happens that way. So how do you prevent that whole process? Just don't trade a bull flag. There's other strategies out there that are 10 times easier and less stressful than bull flags or any kind of like high day breakout strategy. So,
especially with like the downtrend break strategy, that's simple. It's more of a long term. You have a longer time to think about the strategy. You have a longer time to really set it up, develop a plan, and really just execute everything. And I think that was a good strategy for me when I first started. But my personality really moved over to quick in and out trades.
No, absolutely. And you have to trade your personality, guys. And we can talk about that today, identifying your personality and trading your personality. Instead of working against it, work with it. I did, just so you know, Cole, I did go ahead and post a link inside a chat for you. That's a guest invite. That'll give you access to go ahead and jump in and share your screen if you want to, but definitely your webcam and your mic. So at least your audio would be tapped inside a chat, because everybody in chat right now is like, I can't hear you, Cole. You guys are talking, but I can't hear you.
That was loud. Well, sorry, hold on.
So again, good morning. What's up, guys? Kevin's saying, can you talk a little about how to journal? Like, I've just been putting down my stops and price, got in, got out. Yeah, dude, absolutely. I can hit on journaling, and I know Cole can hit on journaling as well, because that's one thing he told me that really helped his trading was journaling the right way. So let's talk about journaling trades, the importance and how to do it. And then we'll dive into some other topics as well. But real quick, who do we got over on the two, baby? We got the Money Trader. What's up? Hey, Alpha, for Lightspeed platform, when market opens at 9:30, do you limit order or market order? I tend to market order in and out of trades. What's up, Mexoids? Didn't Mexoids used to be in chat? Yes, he did. Mexoids was in chat for a very long time.
All right.
There we go. Look at that beautiful person there. What's up, buddy?
Good morning. Good morning.
Good morning.
Can you guys hear me fine?
Do the order fill in immediately using market order for Lightspeed? They do, relatively fast. I mean, and I like it because, for example,
Good morning. How are you guys doing today?
TD Ameritrade, right? TD Ameritrade, if you have a 10,000 share position and you try and market order out, you're going to get partial fill, partial. It's going to take forever to get out, and there's a lot of slippage. If there's liquidity and there's volume and I go to sell 10,000 shares, I get out, boom, I'm just out. It's that fast. And that's the importance of, a premium day trading broker if you're going to be trading with large size and large capital.
Well,
Tim, what's up? Ed, good morning, Ed.
Yeah, so trading candles is a good strategy too. Now, I wouldn't only rely on trading candles. I would use that in tandem with another edge of trading, another way that you like trading. Possibly use a pivot low for a candlestick pattern at the bottom of a bull flag that is also about to come back and touch like maybe the 38.2 fib level with the pivot low. You have to have multiple different things to really validate why you are bullish on a stock.
So let's do this for Kevin, and this is going to be beneficial to everybody. So just real quick, audio check. You got my audio, You got Cole's audio. You guys are good? Ready to rock? There's an echo on your ends.
Here.
It's probably Cole. I'm going to blame it on Cole because he can probably hear me, and then it's being pumped through his mic, so it's all Cole's fault, guys. It's all his fault.
All right. Can you hear me? Or wait, is there an echo?
So I can hear you, yeah.
All right, give me.
It was probably the echo. Actually, it was my fault because I had the audio blaring on my phone. But now it's tuned down enough to where I can still hear Cole. You guys can hear me. We are all set, baby. You guys want to journal better? Absolutely, right? Journaling is intimidating. I thought journaling was intimidating as a new trader. It's boring. It takes time. And I'm like, screw this. I just want to make money in the market. I just want to make money. Screw this. I'm going to do the same thing. I'm going to pop my headphones in, Cole. Give me 1 sec. We make this, we'll make this 10 times better for quality and stuff like that. And we still got plenty of time. It's only 8:40 in the market. Jeez, in the market.
In the market.
It's so natural. It's like, it's 8:40 in the market. It's 8:40 on this beautiful closed Friday.
Yeah. I mean, I'm sad.
There we go. We good, guys, on TikTok?
Awesome.
Yep, cool. I can hear you.
Awesome.
Nice.
Going to my
All right, so we should be
birthday
good
right now. Hope you have fun as Nexoids.
Thought we had the day off. There was no days off around here. No days off. No, we don't stop. We keep working. We keep trying to help you guys out. Help you guys figure this it's just trading. Yeah, trading's hard, right? Trading's difficult. Yeah. Like even to this day, I find trading on some days to be difficult, to be challenging, to be hard. But yeah, this is why we do this, guys, to try and simplify it, to try and make it easier, to try and help you guys out, make those consistent profits in the market. So let's do this, Cole, if you want. Kevin wants to talk about journaling. So right now he's like, I've just been putting down my stops, my price, where I got in, what I was looking for, and info on that. He goes, should I be drawing the chart also? So it's up to you. The way I journal, and I'll let Cole kind of hit on this as well. The way I journal is I don't really anymore take screenshots of charts. But what I used to do is I'd actually take a screenshot of the chart and the stock I would trade and save it to a folder. And then I would just label it so I would actually be able to look at my piece of paper that I would write stuff down on and go and reflect the chart if I needed to see the chart again. But now I don't do that. So what I do when I journal is I just write down the trade. So, okay, this is today's date. I was looking at a bull flag on VERU. My entry was at $6. My stop loss was at $5.80, and I had a $6.50 target. And then I write down if it was a green trade, a red trade, or I got stopped out. And then what I do, once I just have the details of the actual trade itself, and that's where most people stop. They're just like, it was green, it was red, this was the entry, the exit, and that's where they stop. But you really got to dive deep, in my opinion, right? What was your mindset? What was your state of mind for the day? How are you feeling, right? Were you like really tired? Were you like lack of sleep? You came in and you're just like, man, I'm tired today. Did you come in like, man, I'm just not focused. I'm not confident today. Mm-hmm. Or were you coming off a really good day to where maybe you were like overconfident? Like, I just made $5,000 yesterday. I'm going to do that again today. I'm the best freaking trader in the world, right? Overconfidence, cockiness, arrogance. I really dive deep inside myself, and I dive deep and I write down everything, my mindset, how I was feeling, because believe it or not, guys, you've seen this a lot inside a chat. I come in and I'm like, my allergies are kicking my butt today. I am just mentally foggy, no clarity. And when I feel mentally foggy and I don't really have that clarity, I lose confidence. And so I realize like some of my worst days in the market, they could be green days, but they're not consistent, on point, just really exceptional trades, right? It's just more of a choppy day. It's usually because I just lack that mental clarity for the day. And that's something that I've been realizing a lot more lately is, geez, these allergies kick my butt and it takes a toll on me. And that does reflect in my trading. But then there's some days when I'm journaling and I'm like, dude, I was just feeling great. I woke up, I felt great. I went to the gym. I had my morning routine. I was focused. I was clear. I was confident. I wasn't holding on to the prior day, right? Whether it was a green day or a red day, I just left it in the past. I really dive deep and I write down everything, because what you're going to notice 30 days in, 60 days in, whatever the case is, and you go back and review these trades, you go back and review all of these logged trades that you journal, you're going to start noticing things. You're going to start seeing a trend. Like the days I perform bad, it's due to these select few reasons. It could be lack of sleep. You're like, man, I'm noticing on every red day, it's because I wrote down I was tired. Or every green day, it's because I wrote down I stuck to my morning routine. I woke up, I went to the gym, I ate my breakfast, whatever your morning routine is. And you're going to start to notice, like, Jesus, all right, so when I'm tired and I realize I'm tired, how about I don't trade? How about I scale back? How about I paper trade for the day? And the days it's like, man, I'm focused, I had my morning routine, I'm feeling good, and you're going to realize those days, you're like, these are the days I want to hit it hard in the market. These are the days that I want to make it happen because I'm ready to go, I'm prepared, I'm focused, and I just feel good. So really just take that time and dive deep, in my opinion, and write down as much as you can, not just about the trade, but about your state of mind, your mindset at the same time. And I'll let Cole kind of hit on what he thinks as well and what he does, because I know Cole was telling me about a month ago, if it wasn't for journaling, he still may be where he was at 60 days ago. But the fact that he started journaling and really taking the time to be thorough, that really helped him exceptionally start making more money in the market at the end of the day.
Yeah, 100%. And I started out just writing down, I entered here, this is the strategy, this is where I take profits, why I don't think it worked out in my favor, why it didn't really work. But I don't really even talk about that in journaling. I just talk about, again, I traded this, looking for a bull flag, but then I really focus on is what I was feeling. Am I tapping my foot? I like to tap my foot. I notice if I tap my foot and if I'm about to enter a trade, I stop that and I try to totally sit completely still, completely focused, completely drowned drowned just in the chart. Just you are reacting to everything. And with journaling, you want to just kind of pick apart what you feel in the market. And again, it's hard. You're not going to know your emotions. Trading is about emotional intelligence. And if you haven't journaled that much, it's going to be hard to write down all of your emotions because maybe you don't know really what you're feeling. Could be fear, greed, could be so many different things. Like, for example, like you cut your loss too quick, it ends up running. The next stock, you don't cut it too quick because you want to give it that breathing room, but then it goes against you. Like, even though you should have done the right thing of cutting it, you never. And journaling will really, really help you understand. Again, Josh hit it on the head with what tendencies you have. And you won't be able to break them unless you journal because, again, all the days kind of just mix together. Oh, I traded Monday. I don't know what really I want. I don't know what strategy I traded. But I personally write all of my trades in paragraph form. And that's what I think really helped me. Not like just labeling the ticker, entry, stock. No, I have to write it all in paragraph form, like what happened, and kind of it has to go in order with how the trade was executed.
And the more detailed you can be, the better, which, again, takes time, right? It does take time, but I promise you guys, you spend that extra 5 minutes to get extra detailed, and you spend that extra 30 minutes at the end of the week, an hour at the end of the week to review each and every journaled trade that you had logged, you're going to start realizing things that you weren't able to realize before. And that's what helped my success greatly, was journaling trades. That's what's helped Cole's success extremely, was journaling trades. So let's talk about how you can journal trades. I use pen and paper. I like writing things down by hand. If I opened up my closet behind me, I could probably pull out 1 million pieces of paper over the last 7 years of trading of journaling. It's insane. Cole does it via like an Excel spreadsheet, right? So some of you guys may want to do it via Excel and still write it by hand, whatever the case is. But there are some resources out there, and we're partnered with TraderSync. It's an online trade journaling software. You can actually API or link your broker. So every trade you take on your broker, it'll automatically get logged in the TraderSync database. And you can go in and segment it. So you can go in and say, all right, this was a bull flag. right? And you can actually classify it and group it, and it's just going to show you statistics and data that you may not be able to get by doing it by hand. And it's just going to give you all of this data, your win rate, your percentile. Is this a good strategy that works? If not, I mean, it's going to give you a lot of data, and you can actually put notes in with those trades as well and go back and review your notes. So at the end of the day, you're still going to be journaling the way we say the journal based on our experience by journaling, what works, what doesn't work. But that's going to give you a lot of data that you may not be able to get with writing it down on pen and paper or doing it with an Excel spreadsheet. So that could be a resource you use, or do it like Kohler I. Excel, pen and paper. There's no wrong way to journal. As long as you're journaling, you're doing something right that a lot of people don't do. You start journaling, you're going to start to find yourself in that 5% of traders that are successful, making consistent profits in the market, because every successful trader, they do the same things. And one of the things that every successful trader does is they journal their trades consistently without fail. It's boring, but you guys got to do it. You want to make this happen? You guys got to do it. And it's easy. Once you get the discipline behind it and the consistency, it becomes natural. You just do it, right? Without even thinking twice.
100%. And you could look at it as it's your job to do that. It's your job to find out what works, what doesn't. Because when you're just starting out with trading, you just be like, oh, there's this pattern, there's that pattern. And you just start trading the patterns thinking that you understand where the market's going to go. And journaling it will allow you to unlock a different potential and a different way of seeing the market, because there's unlimited amount of edges out there. You can find so many different things or put so many different things together to really give you that edge. And journaling it will almost define it more. It'll make it easier for you to just find your edge.
No, absolutely. 100%. And Steve has a question. So his question is, do you journal right after the trade? Me, I don't. And the reason why is if I take a step back for 10 minutes to journal a trade, you guys are missing opportunities. So I have to be extra mindful to remember the trades I take in my mindset to go back when I jump off the mic from 12 to 2, or at the end of the day to go through and actually go back, look at the trades, and actually just remember them in my mindset and the state of mind and everything like that. So for me, it's a little bit more challenging. I would recommend right after the trade because it's fresh. It's in your mind, right? If you wait 2-3 hours, let's be honest, you're probably going to have another 1 or 2 trades in that time frame. You're probably going to forget everything about the first trade and those exact details. So while it's fresh in your mind, I would recommend just taking that 5 minutes and journaling that trade as best as you can. And you can always go back at the end of the day and add to it. But I would definitely get all that fresh information right then and there out of your mind on paper in the moment. So that's my recommendation.
Yeah, and I recommend that you record your trades.
Good point. Yeah, hit on that.
So you can go back and look at it and understand what you were feeling, because there's probably something that you said in the trade. Like, well, I guess it might be different because I go live and there's some things that I say in the trade that like don't really make sense. It doesn't really apply with what's going on. Why am I saying that? Because maybe I'm fearful that this could go against me. And it's you unlock like the raw footage of you being in a trade, of your mind. Just if you're connected with the charts, your mind you're just going. And again, sometimes tunnel vision of just kind of takes over, your emotions take over. In recording it in trade and journaling, it will really allow you to understand when you are on tilt or just angry at the markets, or not want to sorry, I'm not too sure, but
hey man, dude, it's 8:56 in the morning on a Friday. The market's not open. I get it, and we're maybe a little mental squashy. Yeah, right. So I didn't even screw up. Mental squashy. It's not even a word. That's how.
I got 300 milligrams of caffeine right here.
300. I got 200, and I'm still trying to wake up too. So, JDOS, will you repeat the website? TraderSync, TraderSync. So, if you guys go to the website, right, alphadaytrading.com, and you're just kind of checking us out, who we are, what do we do, and you scroll down, you actually see TraderSync. They are one of our partners. So you just go to tradersync.com, so TraderSync.com, You can check out what they do, all the details, all the information. They have an app. I mean, it's really cool stuff. And again, you can link your broker. They have over 240 brokers they support to link it. And this is what the platform looks like. So it's a pretty cool platform. I've talked to Josh. He's one of the head representatives with them. That's when we started the partnership with him. He walked me through the platform, all the ins and outs. And I was like, dude, there's a lot. I mean, there's so much you can do within this platform. It's just amazing. Pricing, it's not bad. If you go with a monthly, it's like $29 a month. You get a free trial, but if you do sign up, use code ALPHA when you guys sign up, all right? So if you use code ALPHA when you sign up, I think you save like 10 or 15% off through that partnership we have with them. So it is tradersync.com.
Oh, yeah, and so Jack asks, does a double top...
Steve asking, how do you record the trade? So you can use a couple things. So probably not the browser version. So you would probably have to download OBS, right? If you go to just OBS on Google, you can download it absolutely free, and it's going to be it's a streaming tool. It's a streaming tool that I use. It's a recording tool as well. Very easy to set up. So all you do is you capture the screen that you're trading on, and then during the day, all you do is just click record, and it's going to record for you in the background. When you're done trading, you stop it, and you can go back and actually review your entire day, and you can actually see exactly what you were doing. Now, obviously, if you record 8 hours, that's a lot of data. That's a lot of memory it's going to take up. So maybe get like an external hard drive to put all those videos there, because over time, you got 2, 3, 4 gigabyte file sizes for videos. Your computer's going to hate you. Or take them immediately and upload them to like a Google Drive or something like that. But again, it's OBS, and then you just capture the screen you want to record, and just hit record, and it's that simple.
Yeah. I mean, I personally like watching back my trades.
Absolutely. So here's a good question. And I let Cole start with this one. You could start to see some of these questions popping up on the screen here. But we have Danny's question. So Danny's question is, can you explain how you personally determine support and resistance? Everybody does it completely differently, but let's just sum it up to keep it very simple. So how do you determine personally support and resistance? There's multiple ways to do so.
So I would say, first of all, right out of the gate.
So for me anyway, I start with the daily chart. So I start with higher time frames. And what I do is I look for extremes. And what's an extreme? A high a day, a low a day, right? So I look for, you can call them inflection points, whatever the case. I look for extremes, high a days, low a days to start. And then I try to see if that extreme lines up with prior levels of support and resistance. So for example, if you're looking at like VERU with me on the screen right now, right? If you guys can see this, VERU, hopefully it's clear. I'm not sure if it is or not. Again, this is day one me trying this out, so just bear with me here. I think that's a lot better if we just blow it up like that. There we go. Yeah, so I mean, just to really hit it on the head, I mean, I look left, right? So I'm looking at a daily chart. I look left at prior chart history. History likes to repeat itself. The further back you go, the more conviction you have. So if you go back 6 months, right, and you start identifying levels, and then you start going back a year, 2, 3 years, and you see that those price levels are lining up multiple times, that's going to be a pretty solid level of like support and resistance. So for example, I'll just kind of hit one on the head real quick. If I see this high a day, right, so I see this extreme, right, this candle gapped up, it opened up higher, it spiked all the way to $11 and 14, 14? That's an extreme, right? That's a high. That's a high a day. That's an extreme point. And what I want to do is now look to see if that level, that price, is hit multiple times in the past, right? So I'm still looking left, and I can see it was another high a day, right? 11.14. It was a high a day here. Okay, so there's one point. I see we took a little bit of heat here, right? But it was still pretty close to this low a day, but not quite. But there's a high a day. Pretty darn close. There's a high a day, right? And I see that these extremes are lining up multiple times. It's not just one time, it's 2 times, possibly 3 times. So why in the world did VERU, right, hold that level of support? on Friday. So this is Friday. No, that's not Friday's chart. That is Wednesday's chart on VERU, right? So that's only one price level. That's only one level of possible support resistance. And it lines up with this spiking high from May 5th. It lines up with this extreme, that spiking high from what? December 16th. And we can see that there's more price action or volume most likely traded around that same price as well. Like it's pretty close to this open. You know, opens and closes of daily candles like to hold up as levels of support and resistance. We can see here is pretty close to that low a day, pretty close to that low a day before we put in this doji and bounced and reversed. So we can see that this 1114 is a level that's been honored multiple times in the past. So why in the world did VERU hold $11.14 as support on Wednesday before it ripped? It's not just a coincidence. It's not just random that 1114 was support. It's being derived, right? That level is being derived. It comes from the higher time frame, the daily chart, and that was a level that had been honored multiple times. And so you're not just doing that for one price, you're doing that for multiple prices, right? And the more you do it, the faster you are, the more efficient you are. So I can look at a chart and I can say $10. Or I can look at a chart and say 15.58. I can look at a chart and say, that spiking high, 18.64. And then when you actually start looking at your intraday charts, you're going to start to notice that a lot of these levels are being honored intraday, and they are valid levels of support and resistance that you could utilize to help base a trade off of. So that's what I do. I start with higher time frames. And then I dissect it. So what I'll do is I'll start with a daily, and then I'll go into a 4-hour time frame and really just try and fine-tune these levels. Really try and fine-tune them. Then I go into an hourly, a 30-minute, and really just fine-tune them the best that I can. And then I have my support and resistance levels for the day. I have levels that I could be a buyer off of if it's support. I have levels of targets, right? If we ever got up to 1846 on VERU, that would be a level that I'd start taking profits, because 1846 is a prior daily level that other traders see. And if they see it, what do you think they're going to do? They're going to start selling. What happens when traders sell? Stock go down, right? So again, it's just psychology at the end of the day. Every other trader's doing this, and that's why you see the stocks move off these levels, because traders are buying and selling based on these levels that they identify on those higher time frames.
Yeah, I mean, support and resistance
so
is
definitely
that's
my
thing.
answer on identifying support and resistance. And I would say if you want more really just thoroughness, right? We have a lesson on YouTube labeled Support and Resistance, 2022 lesson. It's about an hour long, and we really dissect support and resistance a lot more thoroughly than what we can do here on the stream right now. It got quiet.
Yeah.
It got really quiet. I hear birds.
Sorry. Yep. I'm
because I was on low power mode, so I couldn't hear anything. My bad.
Yep. And your live just totally
my live ended on TikTok.
Yes.
Shoot.
That's what I was
My live
trying
ended.
And then, so tech for beginners, what is the best time frame to do wedges?
Okay,
So
I guess
really,
it wasn't meant to be. I guess we're just solely here on YouTube and chat now. My live ended on TikTok.
It was meant to be. So again, yeah, with tech for beginners, it's all going to be based on how long you want to be in that trade. It's solely based on what you want to do. Personally,
Now I'm just trying to see if I can hear Cole
You can't hear me?
on my end.
Can you guys? I mean, my hello?
Crickets. I can't hear anything right now. Well, I was definitely not prepared for this, was I?
I do. Okay. Got it. Thanks.
Good there? Yeah, I don't hear them on my end. I don't have any audio out for some reason.
Okay.
Oh, that's why. I can hear him now, probably.
Hello?
Yep, I gotcha. Cool.
All right.
Cool.
So yeah, there's a little bit of an echo. Yeah. Cool, I can hear you both. Awesome. Yeah, for tech for beginners. Yeah, so the time frame is solely based on how long you want to be in the trade. Really, again, it's not going to be the same thing every single trade, but it's going to be a vast distribution depending on time frame you're using. Again, you can use the daily chart, and those trades would last multiple weeks, or you could use the 5-minute work and last maybe 5, 10, 15 minutes, possibly even longer.
Yeah, I hear it, guys. Bear with us.
Yep. We're working
Is it
something.
just in chat? Is the echo, guys? Or is this on YouTube as well? Bear with us. Technical difficulties. It's 9 o'clock, guys. It's 9 freaking a.m. We're out of it. So is it just in chat with the with the bad echo? Or is this over on YouTube as well? YouTube too? I don't know why it would be echoing like that. I mean, your audio's in. Does it echo when I speak? Like right now, Cole, I'm going to mute Cole and I'm just going to talk. Right now. Do you hear any kind of echo when I'm talking? Right, you only hear me right now, but I'm just curious if there's an echo with me. Right, you only hear me right now, but I'm just curious if there's an echo with me. And there's not. So I'm going to mute myself real quick. We'll get this figured out in like 60 seconds. I'm going to mute myself. I'm going to unmute Cole and see if there's an echo.
Yeah, see, I'm not too sure. I don't hear any echo.
All right, I know what it is. It's when both mics are unmuted. So someone's mic is picking up the audio from the speakers and it's feeding it back through, and which is creating an echo. So what I'll do is when I'm talking, right? I'll mute Cole. Whenever I'm done, I'll mute myself, and then Cole can jump on just to keep it easy like that. If there's a bad echo.
Awesome.
So here, let's do this. Let's go up and let's keep dropping those value bombs. Boom, boom, boom. All right, next question is from Jack. So does a double top or a double bottom have to have the same price at the peaks, or can there be a slight offset? Would you like to take this, Cole, or do you want me to take it?
I'm sorry. I was looking at my TikTok. I'm sorry. TikTok feed. What was the question?
So the question is, does a double top or a double bottom have to be the same exact price at the double bottom or that the double top, the peaks or the lows, or can there be a slight offset?
I personally believe that there can be a slight offset. Again, a double top, double bottom. We're going to use the double top, for example. You could have a lower high, and that could be considered a reversal. You could consider that a double top. It's really about, all these patterns are more subjective than just a textbook. I would consider a double top to be, if it's at the same price level. You'd also have to be careful of a cup and handle if it is at the same price level. A lower high, if we are looking at a double top, I would consider it being it's a double top because it's a reversal. And if you have a lower high, that's also going to indicate a reversal. So, I mean, that's all I have really. Double tops, double bottoms, I really don't trade them, really don't use them so that's not really my expertise when it comes to trading.
So I'll hit on double tops, double bottoms. And the way I like to classify a lot of things are like, I grade setups. I grade what I see, like it's A+, B+, C+, whatever the case. So I gave it a grade. Exceptional, good, decent, right? So if you see a double bottom, for example, right? You got that first bounce, comes back down to the same exact price and holds beautifully, like, oh my gosh, that is beautiful. That would be like an A+ double bottom. And you're going to see more validation with those being better reversals, whether that's a double top or a double bottom. If you start to see, again, a slight difference in price, like say it kind of dips below just a little bit, or it's slightly higher, like a higher low, it still could be a double top, double bottom, but it may not be something you're as confident with. If you see one that's just textbook perfect, to the penny, clean, those are the ones you're really, really confident with. You start to see ones that are slightly different in price, like that slight offset. Maybe you still have confidence, but maybe you don't have as much confidence or as much conviction that it's going to be like that super clear-cut reversal that you're expecting. So that's what I do, is I kind of grade. any kind of setup, right? Not just double tops, double bottoms, but bull flags, the boom, boom, bang strategies, inverse head and shoulders formations, right? Some are just like, oh my gosh, that is the most beautiful setup I think I've ever seen. You give that an A+ grade and you're going to be more aggressive on that trade, right? You're going to size up maybe a little bit because you're just like, wow, this looks clear. This is clean. This looks great. I want to trade it. Then you're going to have some that you're like, I mean, yeah, it's a double bottom, but it's not as crystal clear, right? It's not as perfect or as beautiful. I still think it could reverse. I still think it's a double bottom, but I would give it a C, right? It's like an average setup. It's an average double bottom. So maybe you're not as aggressive on that trade. Maybe you scale back and size down, but still take a position, for example. But I also want to add this on to the table as well. We're not trading off one reason, right? If you see a double top, that's not just a reason to take a short. If you see a double bottom, that's not just a reason to go long. You need to have multiple separate reasons to take a trade, right? So if you're seeing that double bottom occur at a valid level of support and the VWAP's there as well, and it's a 50% fib retracement, now you have 4 separate reasons that support a long trade versus one reason, a double bottom. And it works the same thing, the same way with double tops, right? You always need to have multiple separate reasons to enter a trade. And what do I mean multiple separate reasons? Multiple different forms of technical analysis, right? So that's why we use indicators. Volume, RSI, 9 EMA, the VWAP, Fibonacci retracements, Fibonacci extensions. And what we're trying to do is, identify a good buy level, identify good sell levels. And how do we do that? We find multiple you find a price, right, an entry area that lines up with multiple forms of technical analysis. And that was my example, is you see a double bottom occurring at a validated level of support. It also happens to be a 50% fib retracement level, and it's also right off the VWAP. So you have VWAP support, you have 50% fib retracement support, you have a prior daily level of support, and you see a double bottom, which indicates market structure and indicates a possible reversal. Now you're really building that confidence because you have multiple separate reasons that support your long trade at the end of the day.
And you want to see volume start to come in off that level. If you don't see volume, the trade's not valid. Volume is the cause, the price action, the effect. If you have a lot of cause or a lot of volume, you should have a lot of effect or a lot of price movement. If you have a lot of cause, a high cause or really, really high volume with not a lot of price movement, again, per candle, that would be a doji candle with a very low spread. That's an anomaly, and that could be a sign that the market's going to turn. Again, that doji candles are not a sign of reversals. They are indecision points. But when paired with high volume and maybe play the break, if it's at the bottom of the downtrend, you buy and it breaks the high of the doji candle. There's multiple different ways that you can trade that and maybe wait for a nice pullback into a double bottom to go higher. But I personally like using doji candles. I only use doji candles when it has extremely high volume for that reason, because that gives you just more validation. The more price action doesn't give you validation because the markets people can manipulate the markets, but again, people do. But the volume is really will give you an inside look at what's actually happening. If you see an uptrend continuing to move and you're just looking at the price action, you'd be like, oh yeah, this uptrend is absolutely crushing it. But if you go down and look at the volume, you can actually see that the volume is decreasing, therefore that the seller or the buyers are not looking to continue to take this higher and higher and higher. There's just no sellers in the market now. And if there's a weak trend, you do not want to trade that. You only trade strong trends. Yeah,
No, 100%. You hit that on the head. Good stuff. So hopefully that answers your question on double tops, double bottoms. Gives you a little bit more clarity and clarification. Tim, what's Tim's question? What's the coupon for Alpha? How do you even know we have a coupon? Tim, did someone talk to you last night? Did someone fill you in ahead of time? Tim, yes. So if you guys are interested, I opened up 20 seats. We had about 2 seats fill yesterday. All right. So it is going to be for our holiday weekend sales event for Easter Sunday, Good Friday. And there's the details. So if you use Easter Egg 2022, you're going to get 10% off the yearly membership. You're also going to get a free copy of the trading course. So right now it's 50% off. It's 100% off. And on top of that, you get one additional mentorship session with me. So that's a one-on-one, that's private, behind the scenes. has nothing to do with being inside a chat. All right, guys. So that's what we're doing for the holiday weekend sales event. 18 seats open, and seats fill up fast. I think it was, 3 weeks ago, I opened up 10 more seats for chat, and they were gone in 24 hours. And then everybody's hitting me up saying, hey, I can't register. I can't sign up. Why? I was like, well, registration's closed. So again, if you go to the website, alphadaytrading.com, and you go to sign up, and it's open, you're good. If it's closed, we'll wait until we open up more seats in the future. But again, that's 20 more seats. So you're probably talking another 30 to 45 days before I start thinking about opening up more seats, just to make sure you guys get my undivided attention. And I have that time to work with you on a more personal level and a more personal basis. That's awesome. The money traders, last year I hit my first $1.2 million from day trading. That's freaking awesome. That's amazing. Good stuff. Been trading for 5 years. That's amazing. Hit your first $1 million in 5 years of trading. That's insane. Good job. Keep up the awesome work. Jay, do you go far back as months and weeks for support and resistance? Yeah, I will. I really just stick with the daily chart. I don't really look at monthlies and weeklies too much, but if you do a monthly and a weekly, it's only going to help you. It's only going to help you identify better levels of support and resistance and give you just that much more conviction at the end of the day.
So I actually was listening to this podcast called Chat with Traders. I don't know if you guys have heard of it, but I've been obsessed with it. I've probably listened to 30 of their podcasts in the past month, 2 months. They're an hour long usually, and this guy was talking about flags, strategies, anybody's strategy, Josh Howerton's strategy, my strategy, Ross Cameron's, Trader Sykes, anybody's strategy. You can watch their strategy and learn the ins and outs of all of their strategy, but if they don't teach you the application of why they are doing this, then you are going to not be able to master that strategy. You have to apply. Everything has to be consistent and in line with what you are trading and why you are trading this. For example, I trade the bull flag, but I don't trade the setup. I don't trade the chart pattern. I trade the volume coming in, the buying pressure coming in. And that's same with the downtrend breaks. You trade that extra wave. You could trade the setup, the double bottom or the higher low into the consolidation, possibly a flag building up on the trend line, ready to break out. We see that volume is decreasing, and then we see a high volume doji candle. Again, there's so many different ways to validate your trade that if you found you can find certain different indications, not necessarily indicators, but certain indications that are going to work better with your application of that trade or of that strategy.
Yeah, 100%, man. I love it.
And good to see you, Ed. How have you been? It's a long time since the work schedule. Unfortunate, but hopefully I'll see you in chat on Monday morning. Ready to make some money.
Oh, 100%. Tech for beginners. What's the difference between a regular candlestick and a Heikin Ashi? So Heikin Ashis are trend-based candles, and they're actually lagging candles. So when you see a candle, it's moving in real time based on the orders that are coming through on the time and sales. So every order that comes through will make that candle fluctuate. Heikin Ashi candles are more for trend-based confirmation. So if you're trying to day trade a Heikin Ashi candle in a 1 minute or a 5 minute, it's just not going to work because again, they're lagging. They're taking the average and then representing or populating a particular candle. So what I would say is if you're going to use Heikin Ashi candles to get an idea of the overall trend, because they are trend-based candlesticks, use them on higher time frames, right? If you're swing trading, those would be perfect, right? It's going to really eliminate a lot of the noise, and it's really going to clean up those charts to give you a really good, clear picture on the overall trend and the strength of the trend as well.
Yeah, I mean, I'm taking a peek at the Heikin Ashi candles right now, and I actually haven't really looked at it, compared it to the volume and everything. I mean, right now it just looks it looks overall like I'm not used to it, so it looks a little bit more choppy because there's a lot more wicks. But I guess you can see that when it's turning, you can see all the inflection points. You can see when it comes down to make a really sharp. Here, I can share my screen actually. Be better. I don't know if. Yeah, but this is Bitcoin on the daily chart. And we can see as we're coming down into this inflection point, you can see that there's really no upper wicks to the downside, to the upside. It's all the lower side. Same with here. Like there's barely any coming down low, but once we start seeing those wicks kind of top out, and really we can see that volume start to fall off after this candle, but we're still moving up. That's telling you that buyers are losing steam, increasing volume. Again, I don't even know how these candles are calculated. How do we know the algorithm or what is?
I could look it up and give you an exact.
I don't know
but like I said, it's what it's doing is it's taking the average of a certain amount of candles and like the average move, and then it's populating a candle based on the actual price action of the real candle or something like that. So yeah, I mean, look it up, but that's what it's doing is it's like if you're looking at a 5-minute Heikin Ashi candle, it's going to take the prior 5 minutes. So it's always going to be like 5 minutes delayed, and it's just going to take that average and clean up the chart. So if you have like 3 green and a big red and a little green, right? Instead of seeing 3 green, little red, and a green, but in that 5-minute time frame, right, it was still higher, right? So you still have a low and you have a high in that 5-minute time frame, but you have one big red candle in that 5-minute time frame, right? It's just going to clean up all that noise and still populate you one green candle, because again, that 5-minute was here at 6, and 5 minutes later it closed at 6:50, right? It's just going to give you one green candle from 6 to 6:50 versus seeing 3 green candles, a big red, and then a big green, for example. It just cleans up the noise and it eliminates the noise, and it just populates one clean candle from that low to high, for example. But go ahead and hit on that a little bit more if you want, if you looked it up, because I could be way off.
Well, I didn't even try. It's the close 1/4, the open plus high plus low plus close of, I don't even know of what the average price of the current bar. Yeah, I mean, it's just, I would suggest if you're looking into the Heikin Ashi candles that you can like fully understand this, and not I understand it because I can read it and see how the algorithm works for the Heikin Ashi candles.
Heikin Ashi.
But I personally, it's just
So I like using Heikin Ashis on higher time frames if I'm looking at swing trades, right? If I'm looking at a swing trade, it cleans up the chart. That's really what you need to take away. Instead of getting too complex with the formulas and the calculations, the simple takeaway would be it cleans up your chart and it gives you a better idea of the overall trend and the strength of the trend. Day trading with Heikin Ashi, it's not going to work because it's a lagging candle. But if you're looking at higher time frames and you're a swing trader or a longer term trader, Heikin Ashi candles would be beneficial. It's just about applying those to your charts and using them to see, do Heikin Ashis work better for you, or do regular candles work better for you? Because it's all personal preference at the end of the day. I know traders that love Heikin Ashis. I know some traders that just never use them, and they still do well in the market.
Yeah, I mean, it definitely seems like it's eliminated the noise in the overall like green to red candles, but I think with overall wicks, because I personally like wicks. I like buying in on the wicks. I really look at them. It just looks a lot like choppier in my opinion coming down. And if we go ahead and actually change this to normal candles, it brings me right back. Where was it? I mean, there's a nice double bottom off the 50 SMA as a higher low. Not really seeing any volume, so let's get that volume in there. I mean, downtrend break. Anything possible. It can happen with Bitcoin. Josh, where do you see Bitcoin going? What is your price target?
$1 million.
$1 million from Kathy Woods?
How'd you know?
Yeah.
By 2030, $1 million. Now, I don't, honestly, to be honest with you, you know me, I'm not really big into crypto. Like, I just don't understand the cycles and how it moves and how altcoins correlate. Like, I just pick brains of people that understand the crypto market. I pay people for insight and guidance and education, right? It's like I'm really good at day trading and teaching how to day trade stocks, right? And I'm really good at educating that. And people learn from me and they make consistent profits. With me in crypto, I don't know it. So what do? As someone that can still trade, that day trades full time, I still actually go out there and I network with individuals that their sole focus is crypto. And I follow them and I listen to them and I talk to them and see what they have to say and the reasonings and the logic behind it. I bought some courses to learn more about crypto. I've paid for sessions with people to talk crypto. Again, it's just not my field of expertise, but the reason I invest in crypto, for my reason, is I just think in 5, 10, 20 years, it's going to be something of value. I still think it's so early on, and I guess the best comparison that I can give, and I could be completely in left field, is I think of technology back in the 90s, right? And this is the one thing I always go to, and it makes sense to me. In the 90s, in the early 2000s, everybody's like, don't invest in Apple. It's risky. No one's ever going to have a computer in the palm of their hand. 20 years fucking later, we all have computers in the palms of our hand. No one thought that was going to be a reality. Technology's always growing. Technology's always evolving, right? That's what our society pretty much revolves around is technology. Computers, cell phones, TVs, freaking airplay, driverless cars. I don't freaking know. So I look at it as like, this is a new technology. There's a lot of uses for this technology in society. We just haven't really implemented all of these uses yet into society. And my best comparison is like, tech back in the late 90s, early 2000s. No one thought it would be where it is today. No one thinks that cryptocurrency and blockchain technology and all that's going to be anything that solves problems. But there's a lot of facts and studies that suggest that a lot of this technology could be implemented to solve problems in our society. And if there's a solution to a problem, I think it's going to be something of value. That's my 2 cents as to why I invest in crypto and I invest in certain crypto projects. Like the one that you talked about, VXV.
VXV.
Like VXV. Like there's a reason I invest in that. Not just because Cole says invest in it, but he took the time to research this crypto and this technology and he sees the uses of it and how it could be useful in society and how we could adapt that technology.
They're partnered with SpaceX or working with SpaceX. Sorry. I had something.
You had something in your throat? Yeah. SpaceX, no big deal, right? It's just Elon Musk.
No.
Yeah, it's no big deal. But that's my 2 cents on crypto and why I invest in it. But I don't just go buy random coins. It's not like I'm holding $10,000 of Shiba Inu or Dogecoin. My investments have purpose, and the ones that I invest in, other really good crypto investors invest in those as well for particular reasons. And I just pick their brains. Why are you investing in it? What do you see here? And I just dollar cost average into about 15 to 20 different crypto projects that a lot of really good crypto people believe in. And so I'm going to follow the choo-choo train, I guess.
100%. What I've really stuck away from is investing in cryptos that are actually trying to be a currency. Not all cryptocurrencies are trying to be a currency. I don't want you to go against the US dollar. You'll lose every time. The government will make sure that you lose. So what you can do is invest in tokens that have utility, that have use. For example, VXV, you can use you hold their tokens and you get access to their data analytics. You get access to their artificial intelligence that creates data sets. And there's so many different more. We can go down the lines. Quant, I'm not too sure because they're kind of weird. But they do have a very low supply. I think 14 million in supply. Bitcoin's at 21 million. So you can definitely see that a supply shock with Quant potentially coming in. And most tokens are used to be like in their ecosystem, like different layer ones, like MTV and Binance Smart Chain. You have to have both of those tokens if you're looking to navigate throughout their ecosystem. So they're not necessarily trying to be a currency or trying to compete with the US dollar, but they are allowing you to just be able to interact with everything in their ecosystem.
And that's why his name is Crypto Cole in chat for a reason. He knows a lot about crypto, guys, and he takes the time and does that due diligence and does that research and gets involved with their communities, and he reaches out to the founders and the creators. I mean, he really spends time to make sure that if he's going to put his name behind a crypto investment, that he's done hours upon hours upon hours of research and due diligence to where he knows it's not just like throwing 10 grand into Shiba Inu and hoping it goes up. He has facts backing up his claims as to why he believes they're good long-term projects.
My top projects off of this list: ICP, Quant, Link, VXV. These are what I've done like most of my research on. Again, I'm not saying the other ones are bad, because VeChain's a good project, Ethereum is as well, but that have a lot of potential. I'm marking the ones. Alethea AI, it's a little, I'm still 50-50 on it, because I don't know how the tokenomics are. I mean, I'm telling. Well, look at the chart. We had that's on the monthly.
I like the monthly. It looks nice.
Yeah, the monthly looks good, but like
I like a monthly.
Pumped up, dumped. I'm waiting for us to pull back.
But at least we're consolidating, which
yes.
looks decent. Nice tight consolidation. It's not just pump and dump, right? At least you have that pump, and it's trying to hold on up relatively well. It's holding above the IPO or the ICO open as well, which is kind of nice to see.
Which is nice. Yes, it is. But again, I think from the release date, I think this is 3 months. That's 85 bars. It's around 3 months. So they're supposed to be releasing the tokens. Again, I don't know if it's going to be, they've been releasing tokens since the open, but is the market opening today? No, the market is not opening today. What are the best 5 coins to have? I'm new to crypto and want to look in. Okay, awesome. Perfect. So the top 5, really it's going to, if you're looking for more of a safe play, crypto.com is always a good one. We can go to actually coin market cap and really kind of go down the list and really find what it was like. I mean, Tether, I would personally try to stay away from Tether. Tether has a market cap of $82 billion. They're supposed to have reserves back to 1-to-1. They don't. It's just a ticking time bomb.
Yeah, I don't think they do either.
Yes. But the best, I would say, what are good ones is I personally, again, it depends on who you ask. I personally don't like Bitcoin because the technology is old, but it could be a store of value. Again, that's not what I'm trying to catch though in the crypto space. I'm trying to catch something that has a lot of technology that a lot of people can use. XRP, again, been stable for a long time. I mean,
XRP, let's go, baby.
I mean, Polygon's a good one. Near Protocol, Crypto.com, Atom. But I would say the best ones is ICP, Quant, Link, VXV. MTV is a little bit of a gamble, as well as Market Move, which is one that I just jumped in and partnered with all these guys. They're interested to buy any token with debit or credit card. So you know how you have to use Pancake Swap in order to buy stuff on the Binance Smart Chain, and you have to do all this. It's not fun. Like, you have to deal with fees, slippage. If it doesn't go through, you're going to lose your money in the gas fee. It is a process. Market Move is just allowing you to buy it with a credit card. And I can send it like, oh, I'm going to send money. I'm going to send 100,000 sheep to Josh.
Bring it on, baby. Let's go.
And what I really like about this is that you can actually go to their app and go to audit, which is nice. And you could put in any of their token contract in here, and it will tell you overall score. Token looks healthy. No financials found. Holders. Top 5 holders have 7% of the circulating supply, which is great. That's awesome. Top 10 holders have around 12%. So it's not going to be a rug pull because they only have 12%. And it'll give you different reasons, liquidity, no issues, because this will point out if the top person has like 50% of the supply, then it's like, I don't like that. Now, this also is a hyper deflationary token. There was $1 trillion tokens in supply, but now there's only 200 and I think, let's go ahead and see. Yeah, sorry, kind of just jumped over to this cryptocurrency.
No, you're good. I didn't know if you were answering William's question. I thought that's maybe what you were doing.
Yes, it is for sure.
Cool.
But I'm and then I just kind of jumped into this new.
No, you're good. I mean, this is
Yeah.
all valuable, and I'm sure there's a lot of people taking something away
Sure.
from this. So it's worth it, man.
Yeah. So Market Move AI, right now they have burned this many Move tokens. In all these, every single where he buys Move tokens, there's a sell. It's selling that much. Like, so they're burning quick, almost, I would say around, 2 hours, 4 hours, 5 hours, 7 hours, 9. Like, there's over like 10 million maybe in the past 48 hours, maybe more than that, that have already been burned. And it's just going to continue to go down as more people start to hold it. And the market cap, again, this is fully diluted, but the market cap is, I think, around 2 million. Yeah, we saw a big drop here, but nothing crazy. What did cause that? Let's see what happened. I don't know. But yeah, I mean, I'll figure out what caused that. And any other questions? On a 90 EMA trend, what are key signals that the trend is about to end? Should I still hold a trade even if the candle opens below the 90 EMA line? So that's solely based on how your edge works. I really use the 90 EMA in moving averages for as like a mean. How far are we away from the moving averages? If we're really far away from the moving averages, we are most likely going to pull back. But I would really focus on what the price action is doing on the trend. If you see decreasing volume and the trend is still moving higher, that's a good sign that you might want to start taking some profits. If you see high volume come on a doji candle coming into some resistance, we're looking to get some selling pressure starting to jump in, and maybe take half off the table. If it pulls back even more, maybe take another half off. Really, I don't use the 90 EMA trend as a strategy. So that's all I can give you on. I don't want to speak.
Yes, I'll hit on that. So the takeaway is, what's the signal that the trend's about to end? If you're using a 90 EMA to, I guess, continue the hold, trade at the end of the day. So, for example, what I would say, number one, is if you're going to be, say, scaling out of a trade and holding a trade, utilizing the 90 EMA as your confirmation that the trend is still intact, don't use it on a 1 minute time frame. The 90 EMA is great and all for quick moves off the 90 EMA, for example, but you really want to use like higher time frames. In my example, at least a minimum 5 minute time frame. And then the confirmation, to answer your question, that the trend's about to end is the first red candle that closes below the 90 EMA. So if you were looking at VERU, for example, and let's say you were in this trade for say a high day break, right? Let's say you're like, all right, I'm gonna buy this for a high day break. Don't suggest it, but let's say that's what your idea was, right? And you have targets, you're gonna sell here, sell there. But let's say you put yourself in a position where you have a runner, right? So you've already sold 75% of your position. You're profitable. You now have a stop at break even. You're risk free, but you want to see how long you could hold this trade, utilizing the 90 EMA on a 5 minute time frame as a trend confirmation indicator, right? What's the signal that the trend's getting ready to end? The first red candle that closes below the 90 EMA is where I would place stops. So let's say you're in VERU, high day break, 1258, right? You're taking profits at 1350, 1450, whatever your targets were. Now you have a runner on the table. What I would do is I would trail my stop loss under the 90 EMA, right? Give it some breathing room. I don't want to get prematurely stopped out because you could actually see the price drop below the 90 EMA, like a lower shadow, and then still close above. You're looking for the first candle to close below that 90 EMA. And here, you could have taken it all the way to 16. You see we're holding the 90 EMA. We rip higher, holding the 90 EMA, and then boom. You see this red candle that closes below the 90 EMA? That would be the signal that the trend is possibly going to start reversing. Now, again, like Cole was saying, use multiple reasons to justify entries and exits, where to take profit, where to stop out. But you could utilize the 90 EMA as another form of technical analysis to help gauge, is the trend going to continue higher? And on this example, you could have technically rode this just by using the 90 EMA all the way up towards around $16. And then what happens after that red candle closes below the 90 EMA? You see the trend starts to reverse. You have a little bit of a downtrend. It's downtrending, it's downtrending, it's downtrending. So you could see on this example, VERU, that if you would have utilized that 9 EMA as your trend confirmation, just simply waiting for the first 5-minute candle to close below, you could have taken this hypothetically from a high day break all the way up towards around $15.93 before that 5-minute candle closed below the 90 EMA.
Yeah, and I used to, when I first started trading, I took what Josh's strategy was, the downtrend breaks, boom, boom, bang. I absolutely love that because one of the first trades I did, I got hooked, was on PHUN and DWAC. When DWAC went from $12 to 175 within like 1 to 2 days. That was absolutely insane. And my first really exposure to the downtrend break was on PHUN when we broke out at around $4 and ran all the way up to 24. And I ran again. I ran that whole wave, with the downtrend break. So that's really what kind of sparked my interest in it. But then I started using the 9 EMA and 20 EMA as well to kind of almost validate it. I called the 920 squeeze out of the downtrend break. And again, that really fell apart because I didn't want to back test it, didn't want to do all this. And I just kind of, my personality just didn't flow with that kind of way of trading. And so Chris asks, what's the difference between an EMA and an SMA? So EMA is an exponential moving average and SMA is simple moving average. The exponential moving average will put more weight and more emphasis on the most recent price action. And SMA will just do they put less more weight on? They put less weight on it, or is it just like an average they take into a bigger? Okay, I guess you can set the length to whatever you want.
You can set the length, obviously, like 9 period EMA, like a 9 EMA, 20 EMA. But yeah, so basically the takeaway is the EMA is weighted more heavily, so it's going to follow price action and the price a lot more closely than an SMA will. EMAs are best used intraday, 1 minutes, 5-minute time frames, 10-minute time frames. From my experience, EMAs are what you want to use if you are day trading. Higher time frames, I more or less use SMAs, the 200 SMA, the 50 SMA. I do use a 20 EMA on the daily chart. I used to use a 13 SMA, but I realized the 20 EMA is respected more. So why do I use these EMAs and SMAs? They're not just random. I'm not saying I want to use a 12.2 EMA, right? I'm using the EMAs and SMAs that every other trader uses, the most popular ones, right? And the most popular SMAs are the 200 SMA on the daily chart, the 50 SMA on the daily chart, and a 20 EMA on the daily chart. So I use those three moving averages on the daily chart because I would say 80% of other traders use them as well. Indicators aren't just magic lines drawn on charts that just magically hold up a support and resistance. The only reason we see SMAs and EMAs respected is because other traders are utilizing them to buy, to sell. So if a stock comes down to the 9 EMA and it bounces, it's because traders are placing buy orders at the 9 EMA, which is then causing the stock to bounce and move higher. It's not just that a magical populated line on the chart that just magically pushes the stock up. It's all trading psychology at the end of the day. So what you need to do is understand what an EMA is and an SMA, like we're explaining now, and use the ones that 80% of other traders use as well, because that's when you're going to see these types of indicators respected versus not being respected. Because if I made a indicator, the Alpha Day 1259er MACD cross, like no one else is using that besides me. So is that really going to be an indicator that's validated more times than not? Probably not, because no one else is using that indicator to buy and sell off of. So again, always think, what is everybody else doing? What are other traders in the market using, right? Those are going to be those indicators and forms of technical analysis that are respected more or less at the end of the day.
Yeah, and a general rule of thumb for moving averages is, let's say you have a 90 or the 20 EMA on the 5 minute in the daily. The EMA will be more valid or have more weight on it on the higher time frame than the one on the 5 minute. That's just a general rule of thumb. And then the higher the weight, like the 200 SMA, will be stronger on the daily than it is on the 1 minute. It'll be harder to break through that 200 daily than the 200 5 minute or 200 1 minute. I personally don't use these to trade. I use them as just a mean reversion. How far away are we from the 9 EMA? Are we going to pull back? How far away are we from the 20 EMA? And that's I rarely ever use any indicators to jump into a trade. I don't use any indication besides volume confirmation. I guess you could consider that an indicator, but I mean,
yeah, you could.
Everything else is just a reference letting you know what you're reacting to everything else. But then volume is really going to tell you whether people are looking to take this out of the inflection point and out of the trigger point. And once you break out of that area, you see, if you don't see volume start to come in, but we're still kind of pushing out, that is most likely going to be a rug pull. Take profits there, move stops up to break even. If it's not a rug pull, you can continue to catch the move. If it is, you took half your profits and your stops at break even.
Absolutely. Lewis, what's up, Lewis? When you are charting support and resistance lines, do you mark every little peak or just the largest? How far back do you go? I go back as far as I can. 5 years, 10 years, 20 years. The further back you go, the more conviction you have. I don't mark every little peak. I mean, if they're extremes, like an extreme high a day or an extreme low a day, I'll mark those peaks, right? But what I'm really looking for is a price that's been honored several times in the past as a level of support and resistance. So if you see a little peak, it's not super significant, it's not an extreme, and you see it's only tagged that level one time in the last 20 years. But you see a different price that's been honored 10 times in the last 20 years. I would rather go with the price that's been hit as resistance, say 10 times in the last 20 years versus one time in the past 20 years. So go back as far as you can. That's what I recommend, more conviction. And I'm looking for extremes, highs a day, low a day, and I want to see that price line up multiple times in the past because it's going to be more or less validated at the end of the day.
Yeah, and I mean, I think moving averages are definitely something that every single trader likes. I'm not even too sure how to explain the moving averages better than what we have already done, or what we already have talked about. But I would not focus on one indicator or multiple different, a combination of moving averages for your trade. Pair it with, I would say the key thing, and I don't know how what his edge is, but the key thing, the most important thing for my edge is volume.
You want to know what my edge is?
Yes.
My edge is getting in, getting out for profit, and then the stock ripping to the moon, and the chat making the rest of the money. That's my edge. Getting in, getting out. All right, I'm out. And everybody's like, let's get into the trade. Let's go. Josh is out. Let's buy. And then the thing freaking rips 100%. That is my edge in the market. My edge is helping the team make money.
Yeah, and I'm sure you have another account, right? You need to just buy whenever you sell on one account, buy on the other account.
But it never works that way. I've tried. I was like, all right, I'm out. let me get back in. And then the thing dumps. I'm like, damn it. The times that I'm out, it rips. I'm like, all right, the team's making money. I made a couple bucks. We're good. And I'm not lying. Kevin's like, he's not lying, dude. It happens every freaking time. And every time I'm like, you know what? I want to hold this one a little bit longer. I got a runner on the table. Stops me out. And I'm like, I should have just taken it off the table. So that's my edge is I trade price action. I scalp the market. I'm really good at like just feeling the stock, right? It's just weird. It's like when I say become the stock, I'm really good at just like knowing the stock that I'm trading, how it moves, the price action, how candles are jumping around, volume, and I just really get a sense of movement and direction. And I play into moves. I don't actually wait for the move to happen and then start jumping in because I feel like I'm already too late at that point. And with penny stocks, you get a lot of these rug pulls. So you start to see that move and then rug pull. So I'm really good at like using my gut to really sense when that move's going to start playing out. And I'm jumping in, jumping in, jumping in. We get that quick pop. I'm out, I'm out, I'm out. Just in case it pulls back really quick. So that's kind of my way of trading. But I haven't been trading that way a lot lately because it's not realistic for new traders to jump in with 5,000 shares and scalp it for 20 cents, right? They're looking for, I want to get in and look at this bigger picture, right? Maybe a 20-minute trade, a 30-minute trade versus a 2-second trade. It could be sometimes, but Yared. SMA for swing trading. So again, I personally use EMAs, lower time frames for day trading. And then I use those SMAs for my my daily charts and my longer term charts. So I would say, yeah, if you're going to be swing trading, use the most popular SMAs that other traders use as well. And those are going to be more validated. This might be a question for Cole. My name's Jash today. What's up, Jash?
Can you
I love it.
explain relationship of price action to volume on any time frame, how they correspond, and as they go together? So price action, your volume wants to match the price action. Your volume should match the price action. If you have increasing volume spreads as the trend continues higher, you have a doji candle. Again, the spread is from the open to the close of the candle. You have a doji candle, then maybe something's a little bit bigger, and then something's a little bit bigger, and maybe a candle's bigger at the top for a nice trend. You want to see increasing volume on that whole move. If you have a bigger spread, you want to see higher volume. That validates that trend higher. That validates that move higher. If you see a high spread with low volume, that's telling you that it's not a validated move higher because there's not that many. The buyers aren't validating that price action. Now, how you can use this for is I'm going to use the classic example of stopping volume. And let's see if I can go ahead and do this stopping volume real quick. And as we see stopping volume, we're going to we can have a nice big trend to the upside. And as we are moving up, we can see that the spreads are from the open to the close of these candles. As we're coming up, again, we can mess around these like some wicks, whatever. But what the key thing to look at is the volume. If we can see that we have increasing volume to the upside, and you'll see this a lot. What this is telling me is that since our price action or since our cause is increasing, but our effect, which is the price action, is not increasing proportionally, we can see it kind of rounding off and the spread is getting smaller and smaller, but we have increasing volume. That has to mean that we are jumping into some sellers coming into this area. So you are comparing volume bars to the spread of the candle and to the volume bars around it. I'm just spilling it.
Yeah, that's a good example. So basically what you're saying, just to sum it up, make sure I understand correctly, to simplify it, is the cause is increased volume. So if you have that cause, you want to see the effect, which is going to be increased spreads, ideally on these candles, because that's what the volume's doing. The volume's increasing. You would expect these candles to be larger in difference proportionally. But if you see this increased volume with smaller spreads on the candle, the effect is that could be the top. That could be that level where sellers are going to start coming in and pushing the stock back down.
Yeah, 100%. And you'll start to see this more and more. If you see And this will really allow you to not get caught up in rug pulls as much, because you'll see a breakout and you'll start to see, okay, the volume usually comes in at this much, and then we see the breakout. Then we see, if we see the breakout of the trigger point and it moves higher, maybe it looks like it's getting some resistance, but there is no volume compared to the previous bars, you're most likely going to want to jump out of that trade, because the cause does not match the effect. Now, when the cause does not match the effect, that's when you can make opportunities. That is what I like to trade. And I can use this example as well. We have a very high cause, but very low spread. This is an anomaly. It doesn't happen all the time, but this is an inflection point. And it could be a very good opportunity for you to make some money. Now, with this high volume, doji candle or low spread, however you want to call it, hammer candle, you could play this lower. Maybe take the break of the close, or the break of the open, or the break of the low of the candle. Again, you would have to figure out how you trade, where your take profit is. But I personally look for this stopping volume to come into the downside. This works the same thing to the downside. What about stop hunting? Are you talking about where, Carlos, are you talking about where, I think what you mean is like where the institutions are looking to stop you out in hunting and trying to stop you out. If that's what you mean, no, they don't do that. They could care less about your stop orders. They do have people that will stop you out because they know where it is, but they really don't. They're not out to get you. They're out to make money. What else do we have? Dogecoin to the moon.
And so real quick, there's a book that Cole got that explains volume price analysis, and I actually think that's the book is Volume Price Analysis, if I'm not mistaken.
Yes.
A big a complete guide. Ooh, complete.
This is this definitely changed my trading around. I was reading this and I was like, I couldn't wait to get back and just read, because it makes such a difference in your trading. You start to understand the market so much more because of volume. You start to read the volume more. The volume matters more to you than the price action. If the volume doesn't match, then the price action does not matter.
Man, just nothing but value bombs today. This morning at 10 o'clock, just dropping value bombs. I love it. Stock Hunter said, sorry for misspelling your name. No, I actually like it. I want to be called Jash from now on. I think it sounds better. Jash. It's more elegant. It's more proper. Yeah, guys, again, ask some questions. Any questions at all. If we don't have questions, maybe I could use this time to talk about two topics that I had. And two topics that I had were things that I wish I did differently as a new trader to see better success, more success a lot sooner. And then maybe we can talk about some strategies for beginners as well. So it's up to you guys. But again, I just said we'll open the floor. If you guys have questions, obviously the answers pertain to you and they're helpful. They're beneficial. Carlos has a question about stop hunting, right? So what about stop hunting, like having stop losses in the system? So there's a rumor. It's not like a fact, but there's a rumor there's something called the level 3, right? We know what the level 1 is. That's your time in sales. The level 2 is your order book, right? And there's something called the level 3, right? Which is basically where institutions and market makers can see where pending stop loss orders are at. So how in the world would they get that information? Well, the exchanges would be selling that data to market makers, to institutions. Because if I place a stop order, it's in the system, right? I'm going to stop at $5.80. There's a record of that. So how in the world will they know that I have a stop loss at $5.80? Well, the exchanges, the brokers would have to be selling that data to market makers, for example, to institutions, whatever. So they can see where the majority of stop losses are at. And those provide liquidity pools. So if you have a big group of stop losses at a certain price, the markets could be manipulated to drive that price down to stop all of these traders out, to provide that pool of liquidity so they can place their big order, right? And then in turn drive the price in their direction. Again, that's not a fact, right? It's a rumor, but we all know the market, and we know the market is manipulated, right? Mm-hmm. So it wouldn't surprise me if that is true. So what we could do is just assume it's true. but don't put too much thought into it. Still take your trades, place your stop losses, be disciplined with it, have an edge, have reasons to take trades. Don't just gamble or blindly enter trades. Have reasons, multiple separate reasons. Have a plan in place. If you want to use mental stop losses, use mental stop losses. But at the end of the day, you're still going to be consistent if you do the right things, regardless of manipulation in the market.
Yeah, 100%. And Tech for Beginners asks, is there a way to day trade without 2K to start without breaking the PDT rule? Yeah, so there's a good way to actually do it. It's a cash account. If you can call your broker, have them set up a cash account for you. And what you can do is trade $1,000 on Monday, $1,000 on Tuesday, and then the $1,000 that you traded on Monday will be settled by Wednesday. So you'll be able to trade with that $1,000 on Wednesday, and then the Tuesday's $1,000 will be settled by Thursday, and you'll be able to trade with $1,000 each day. And you can make as many trades as you want as long as you don't go over the volume of $1,000.
So yeah, like you said, just structure your account correctly, right? So only use 50% of your available cash on any given day. So if you start Monday with 2K and you have a rule of 50%, that means you only have $1,000 to trade with, and you have to be disciplined with it. And then that's going to give you that extra 50% or $1,000 for Tuesday. And then Wednesday, the money that you used Monday would be settling, so you could always day trade as much as you want. So technically on a cash account with a small amount of money, only using 50% of your available equity for that day, you're going to technically be able to trade as much as you want. There's no limitation on how much you can trade. You can trade as much as you want as long as you have settled cash in your account. And I think Kyle has a great question. I mean, a fantastic question. I love these types of questions. It's all mindset. How did you discipline yourself? Whether it be position sizing, revenge trading, etc., etc. I know just not doing it, right? It's that easy. It's like, just be disciplined, right? But there's more to it. How did you manage to get past that big hurdle? And that was a huge hurdle for me, and that's a huge hurdle for a lot of traders. I mean, I was the most undisciplined trader my first 3 years. I would have rules. I wouldn't abide by them. I would, just lack discipline to build trade plans, correct position sizing, lack discipline with stopping out of my trades. Even if I had a hard stop in the system, I would fucking move it and cancel it, right? I lack discipline. So how did I discipline myself? I started being disciplined in my day-to-day life, right? Small, easy, simple tasks. Like one of them is drink a gallon of water a day. Like, come on, guys. It's not hard to drink a gallon of water a day. We don't want to do it, but it's not hard. If you can't be disciplined with a simple task, like drink a freaking gallon of water a day, you are not going to honor stop losses. You are not going to honor your rules. You are not going to honor building your trade plans. So what I would suggest is find something that would benefit you in your day-to-day life. That could be, I want to be healthy. I want to drink that gallon of water. I want to be fit. I want to have muscles. All right, let me go to the gym 2 days a week. Don't do something that you just can't do. Don't set a rule that it's nearly impossible. Make it easy. Make it simple. Make it obtainable. And stay disciplined with it, right? Drink your gallon of water a day consistently. Be disciplined with it. Go to the gym 2 days a week. Stay consistent, disciplined with it. And what you're going to realize is you're going to start adding on more of these tasks in your day-to-day life, and discipline is going to become much more easier. You do it with one, you do it with 2 things, 3 things. Now the 4th, 5th, 6th thing that you try to be disciplined with, it's going to be 10 times easier. And that discipline is going to bleed into your trading. It's just going to come natural to you. You're just going to be disciplined with everything that you do. That's what worked for me.
So what worked with me, and again, the same thing, it works. What Josh was just saying, this applies for what I'm about to talk about as well, is what really changed for me was making an Excel spreadsheet, and I can drop it I can actually pull it up and show you guys about what it logs your trades. Once you're logging your trade, you stay consistent, and this is your reputation. Share your screen. Like your reputation. Like I put all of my reputation onto this. Again, this is a copy of it, but I put all of my reputation onto this trade log. If I want to hit my goal, I don't want to I don't want to risk anything. All I'm trying to do is make money at the end of the day, make my daily goal. And once you start to develop that and you really want to just make the trade log the best as it can be, you really stop focusing on the big winners. You stop focusing on the big losers. You just focus on executing the strategy as intended. And you journal that, and you journal why or why not what messed up, and what the hard part is about trading is you can do the right thing and still lose money. You can do the right thing and still lose money. Do you remember log template available Google Drive for us? Yes, I can actually. I'll go ahead and share this link. Anybody, you just have to anyone on the internet copy link. Yeah, so I mean, the discipline of recording your trades, logging your trades, and you will start to just I don't know. There's so many different aspects of where you could dive into discipline from trading, because you can do discipline from all the different aspects of your lives. Yeah. Whoa. Let me. All
right. So, Mr. Jack, if you guys have questions in chat, hit them. Come on, baby. Let's go, chatters. Members, chatters, whatever. Hey, I have no excuse now. It's 10 o'clock. I have no excuse of I'm tired. So, Jack, what's the difference between a bullish pennant and ascending triangle? So there's a difference in the way they form, right? The formation of a bull pennant, bull flag, and ascending triangle. But the key takeaway would be they're both high day continuation patterns, right? So bull flags and bull pennants occur at or near highs of day, and they're intended to continue in the direction that they started, continue the trend. Same thing with the ascending triangle. They form at or near high of days, and they're intended to break out over high of day and continue that trend higher. But from a visual standpoint, right? So from a visual standpoint, a bull flag or a bull pennant is a leg to the upside, right? Followed by a period of consolidation, followed by a breakout of consolidation, and the next leg higher. So that's where you see bullish pennants, bullish flags, okay? Then you have ascending triangles, okay? So an ascending triangle has flat resistance, and it builds higher lows. So this would be an ascending triangle. Same concept, right? Occurring at or near a high a day, right? And they are intended to break that resistance and continue the trend higher. So they're both bullish continuation formations, right? That's the classification, is a bullish continuation formation. It's just the appearance and how you trade them, right? So like bull flags have a different entry, stop loss, target. Ascending triangles have a unique entry, stop loss, and then targets as well. But to sum it up, they're both bullish continuation formations that typically occur at or near the high of day.
Yeah, Chris, I'm not too sure. The link on my end is working. I think. Are you looking at the stream or Studio Restream tab? Or are you looking at the YouTube Alpha Day Trading YouTube?
It is put it in YouTube. Yep.
It is. I did put it in YouTube, and it's still
not showing.
It says. I mean, Chris says that the link's not posting up. Thanks.
Weird.
Yeah.
If you want, you could send me an email, josh@alphadaytrading.com. I'll have Cole forward that link to me, and I'll email you back with the link if that's easy for you. I can do that.
Yes.
Ian, what's up, Ian? How do you regain your confidence after a losing streak?
It is your job as a trader to lose money. You got to just take the loss. Take the loss and gain. And just if you follow your trade plan, you know in your head that I did everything I could have done. So I am confident with my decision making after, even though I've had 5-day, 6-day, 7-day losing streak, you still do all the right things. No trader knows where the stock's going to go. No one has any idea. But we have a hunch and we have probabilities in our favor. We have proper risk management. Your edge gives you an edge. Again, your edge could just be that you're able to take small loss. You're able to take a ton of losses, and then that one big run will wipe out all the losses. Like your edge can be, you can be emotionally better, like emotionally have an emotional edge over people. And I think that's really the biggest factor to really coming back after a losing streak is just follow your plan. If you know you're following your plan, you are doing all the right things. You can have a great trading day and still lose money. I've had plenty of those days where it just doesn't work out in your favor, but that's okay. You followed everything perfectly. Exactly. Yes.
I'll tell you guys how I regain my confidence, because I go on losing streaks, and this is what I do: is I journal my trades, I log them, right, all the time, and if I have a red week or a red streak, whatever, I review them. I'm like, all right, let's really dissect these. Let's pick them apart. What did I do wrong, right? What was my mistakes? That's number one, because we can learn from mistakes, and we could create a solution around those mistakes to not create the same mistakes again in the future. So the first thing is, in order to regain confidence after a losing streak, is number one, you have to log trades to be able to review, and you go back and you pick them apart. You review them, and you start to see what you did wrong. If you're like, man, I was just sizing up too much, which caused me to make my stop loss a lot tighter. So I was just taking too much size, which in turn I was bringing my stop loss closer to my entry to take less of a loss, and I was prematurely getting stopped out. You're going to see that in your trade logs. So what do? You're like, all right, reduce size, open stop loss, right? Take less size so I can have a larger stop loss. That seemed to be the mistake that I was making, and that's why I'm on a losing streak. So what can you do? You make yourself a rule. Be aware of the rule. Be mindful. Take less size and have larger stops so you don't prematurely get stopped out. So the next trading day, the next trading week, what are you doing? You see a setup, you're not being aggressive with tight stops, getting prematurely stopped out. You're reducing your size, opening your stop loss up because you're aware of that. That's something you're aware of. That's something you know you need to do differently to avoid the same mistakes that you were making the prior week as to why you went on a losing streak. That's just one example of how I regain confidence, is learning from my mistakes and taking the positives away from those mistakes and applying those things my next trading day, my next trading week, to prevent making the same mistakes that I made that essentially caused me to be on a losing streak, for example. And that's just one of my examples on what I do to help reboost my confidence. Because at the end of the day, I know I'm a good trader. I know I have what it takes, but we're human. We're emotional. Yes. We're not perfect by any means. We're going to make mistakes. Like, I make mistakes to this day, and I've been doing this for 7 years. So how do I bounce back and regain that confidence? I review my trades. I take away what I could be doing differently, and I apply those things. And then I see more success, and I see better results moving forward. And then you'll have a setback. You'll make more mistakes. You do the same thing. You learn from them. Apply it. Boom. You're back in the green, right? It's a constant cycle, and you're always going to be doing that over and over and over again.
Yeah, and I have a rule to actually help with that cycle, is that if I make a bad trade or I cut my profits too quick and it continues to run, I allow myself to be mad for only 5 minutes. After 5 minutes, I have to come back to my computer, review my trade, what I did wrong, what I did right, everything about it. So if you really restrict yourself to only being mad for a certain limited time, you can do, like, it allows you to have the satisfaction of being mad, because everybody likes to be mad. It's just how, like, that's just how
absolutely
everyone runs. So only allow yourself to be mad for 5 minutes. Like, oh, I should have done that. Like, be yourself, but then come back, step back. Think you have to come at it level-headed, logically.
Take the positives from the negatives. That's what I do. Negative situation, you're pissed off, right? You're mad, punch your pillow, go outside, and then calm down. And then start thinking, okay, what are some positives? Take the positives from the negatives, and then just bounce back. It's easier said than done, but if you do it consistently over and over and over again, you're going to notice that when you make a mistake, you're going to realize it like that. You're going to know exactly why you made the mistake, and you're going to immediately know what to do differently on the very next trade. It's not going to take you a week to bounce back. It'll take you 20 minutes. Like, my example was 2 weeks ago, AMC. I took a dip buy, and I wasn't mindful of the halt level. So I got in for the dip buy. Within 3 seconds, I'm stuck in a halt to the downside. That was my mistake, is I wasn't mindful of where the halt level was. And I got in pretty much right at the halt level. And I got stuck in a halt. It opened. It kept selling off. I took an $8,000 loss. Most traders would be breaking their monitors, breaking their desk. They'd be blaming the market for that $8,000 loss. What did I do? Well, that sucks. It is what it is. What did I do wrong? Well, I got in right by a halt level. That was silly. That's unavoidable. I mean, that's avoidable. It's not, I mean, it is avoidable. I just needed to be mindful of that halt level before trying to take that dip buy after a big dump on down. So what did I do? I took the positives from the negatives, right? What's the positive? Be more mindful of halt levels when you're trading dip buys with large position sizing. So boom, moving forward the next day, I see a dip buy. What's the halt level? Right? The day after that, dip buy. But what's the halt level? To prevent making that same mistake again. And so I bounced back. I was down $8,000, but I learned from my mistake immediately. I bounced back. I felt good because I don't make those mistakes so often. Within 30 minutes, I made that money back plus $100. I had my biggest loss and my biggest gain of 2022 within 30 minutes of each other. Most traders can't do that because they're still holding on to that $8,000 loss. They're holding on to those emotions. They're negative. They're mad. And that causes you to revenge trade. And that's when you're going to lose 10 grand, 15 grand, 20 grand. You're going to blow up your account. So I took a step back. I realized what the mistake was. I'm now more aware and mindful to prevent that mistake from happening. And I came back fresh. I wiped the slate clean, right? It's a fresh day. It's a fresh slate. Yes, I'm down 8 grand. I'm not even thinking about it. Is there another opportunity in the market? I saw one. I took the trade and I looked down. I'm like, holy crap. I just made $8,100. I'm like, whoa. And that's why I was so excited because I wasn't even looking at my P&L. I was looking at the charts. I was trading the way I trade. If it was a loss, I would have looked down. Shit, I'm down 14 grand. I should probably stop, right? But I saw the trade. I managed my risk. I had a plan and I was taking profit. I was reading the chart. And when I looked down, I'm like, holy crap. I just made $8,100 on this trade. That's insane. That's because I disconnected from the last trade. And I just realized that the next trade is a brand new trade. It's a brand new opportunity. It's unique. It has nothing to do with AMC. It has nothing to do with that $8,000 loss. That's in the past. It is what it is. I can't do anything about it. All I can do is move on and see if I can identify another setup and take it the way I would take any trade. And whatever the outcome is the outcome as long as I accept it. And that's when I look down and it's like, shit, I'm up. Break even on the day now. That's crazy.
Hey, John, so for some reason, the spreadsheet link does not want to go up into YouTube chat. So what you can do is actually go down into the description of the live stream, I believe. And Josh, do you have your email down there?
My email is...
I was going to say I can put my email in chat and you guys can send me an email and I can send you the link for it.
Yeah, for sure. Because my email it's easy. It's Josh. Or Jash, no, it's Josh, at alphadaytrading.com. Jish.
So if I sent my email in chat, so as well, you guys can email me and then I'll email back the link because YouTube for some reason doesn't like links.
Jack, being that we are in a down market, does that affect your position sizing, mentality, or how long you stay in a trade? So like day trading, no. That doesn't affect my position sizing, my mentality, or how long I stay in a day trade on like say a penny stock, for example. But from like investments, it does play a factor on my mentality, what I'm thinking, how I'm going to position myself accordingly. But if it's an investment, then I already know it's 10 years plus. So it doesn't really determine how long I stay in the trade because if I'm going to make an investment, it's for the long term. And I don't really care about short-term price movement. So, but it does affect my position size. If we're in a down market and I still think there's more room to the downside, but I like the level and I want a dollar cost average in, maybe I'm not as aggressive. If I want to invest $10,000 into that company, maybe I don't put $2,500 into it. Maybe I put $1,000 into it. And I dollar cost average in a little bit more slowly, more conservative, little by little by little in smaller increments over a longer period of time. If I still think the market is going to continue down, that allows me to continue to bring my cost basis lower and lower and lower and lower and build a really nice position over a longer period of time. So that would be my mentality. And that's how I would reposition myself. If it's a down market, I wouldn't be as aggressive with dollar cost averaging in. I'd be a little bit more conservative and try and stretch that out over a longer period of time just to make sure I always have capital that I can add to that position if needed. What's a halt level? So a halt level is a level in price where trading will be paused, right? So when you have trading halts due to volatility, it means that the stock just ran up or ran down just way too quick, way too fast. And so there's something called a circuit breaker halt, to where if we exceed a certain threshold of volatility, like again, the stock just moves up way too quick, it will trigger a circuit breaker halt where it'll basically pause trading for 5 or 10 minutes to let traders collect themselves. That's really what it was intended for, to let traders collect themselves and just kind of sit back and take a chill, right? So that's a halt level, is a level in price in which trading would be paused for, say, 5 or 10 minutes. And the reason that we did halt levels is there was the flash crash of like 87. I don't know the exact date, but there was like a flash crash 30 years ago where someone fat fingered an order and the markets dropped like 25% in a minute, right? Because he went to go do like 10,000 shares but typed in like a million or something like that and sold way too much, and it just dropped the market like 25%. And there was nothing in place to stop that from happening. So they said we need to put protections in place in case that happens. It would freeze trading and allow, investors and traders to kind of like recollect themselves and kind of take that time, like, okay, what just happened? What's going on?
Yeah, and especially I believe it was 2008 when there was another flash crash. Somebody made an algorithm to put a limit sell order in always above what it's at. So he never got filled, but it spoofed all the HTF traders, HFT traders, high frequency trading, that there's a lot of supply coming into this area, so they're going to look to sell this. They don't want to get caught on the downside, so all of them are selling, causing this big crash. It dropped the market like 9% in like 30 minutes. Email sent. Awesome. Let's see. Yeah, so for some reason, it's not YouTube doesn't like me putting my email. It's colerobertshelton@gmail.com. I'm not too sure what's wrong with the YouTube.
But everybody's emailing me right now. So you guys are emailing me. It's Josh at alphadaytrading.com. And so if you email me, I'll have Cole send me the link, and I'll just go ahead and forward the link to you guys to make it easy.
Yep. All right. I'm about to...
So Lewis is like, gotcha, I know about the halts, but do you chart or keep in mind historical halt levels? Like day trading, I'll keep in mind halt levels for that day because these halt levels do hold as levels of support resistance. So yeah, like intraday, yeah. But if there's a halt Wednesday on VERU and we're now trading Thursday, I really don't pay too much attention unless that halt level lines up with multiple levels of support resistance. Then I'm putting some focus on that level. But if the halt level is just not being validated the next day, then I don't care about it at that point in time. But during that day that the stock's been halted, yeah, those levels do like to hold as support resistance.
Yes. All right. Yeah. So I just forward you the link for the.
I got it.
For the trade log, and how I use it, how it was meant to set up is that at the end of each day, you put in your again at the beginning of each month, put in your starting balance, and then put in at the end of each day your P&L, and then everything else will be calculated. So I mean, I didn't want to pay money for an API, but I definitely want to get an API in the future with TraderSync, but I just don't want to spend the money right now. I'm cheap.
And it's personal preference, like me, do I use TraderSync? No. Why? Because I've been logging my trades for years with pen and paper, and I enjoy pen and paper. Same thing with like my calendar. I just enjoy writing things down in a book, in a calendar, versus like a like Google Calendar or something like that. So it's just personal preference, but yeah, they do have the API. You can link your broker, and it's going to pull those trades automatically, and then you can just go in and segment them and classify them and group them, and then put notes in there as well.
Well, what is nice is last month I actually used TraderView. They're free. I uploaded 1 month of data for free, And what's nice is that it tells me how. I'm sure TraderSync does this as well. I just haven't messed around with TraderSync, which I probably will, since they are partnered with Alpha, and I do like their site does look very good. But what I personally took that helped me for this month was that my average losing trade was held for 9 minutes. My average winning trade was held for 5 minutes. Now, I was still profitable, but that's good to know that I need to cut my losers quicker. I need to hold my winners longer. Those should be flipped.
100%.
So that's what I'm working on this month.
And you would have never known that unless you were logging your
journaling,
trades.
logging it. Yep.
Exactly. And that's how we figure out what we're doing wrong and how we can make improvements is by going back and looking at what we've written down in the past on prior trades.
Yeah.
What is the probability of a halt when the trend is going up, but after the halt goes down? So what's the probability of halt? It really depends. I have a halt strategy lesson that you could listen to and watch. That's really going to break down halts, probabilities, and kind of what the stock has to do after a halt. But maybe Cole has something he wants to add in there because halts are a little tricky to explain in like 5 minutes. I have like an hour-long lesson on halts.
I would say there's no correlation after a halt. I would say every single time for a halt, you should not have a bias on where it's going to go. You should only follow along with the level 2. Now, if you're looking to trade halt strategies, you have to have the level 2 in. Again, halt strategy, gaps up, you're looking for a pullback down to the halt level. You want to look at that level 2 to see that buying wall there. Sometimes it's too quick, you're not going to be able to jump in. But halt strategies I would stay away from. Unless you're in a trade and you get squeezed up to a halt, like that's nice. Right out of the halt, I would take 50% off the table.
And I would say the halt strategy that I trade is not for the faint of heart. It's not for beginner traders. It's a very high risk, high reward strategy. And if you don't have a good broker, good discipline, good risk management skills, you're going to lose more than you win on halt strategies. The way I've perfected the halt strategy, I win more than I lose. But I'm really good at tape reading, time and sales, price action. And I've just kind of, I got an edge around halts and how I trade them. On a certain price has to gap up X amount, the wick down. There's a process that I've created to trading halts, but again, they're very, very risky. So brand new traders, you back test them, you paper trade them.
Yep.
Don't trade them on live accounts because the one that goes against you is when you start blowing up accounts and you get pissed off. So I would say just be calm, cool, collected with it, back test it, see if it's even something that you like. Because they are very quick, very fast. They are high-risk trades, but they could also be very, very high reward if executed correctly.
How I think what's like the similarities of a halt opening up? I would say it's almost like identical to a market open at 9:30. You might see a nice pop and then a washout, like a panic pop, or you could see a nice washout down low and then a pop higher. So the psychology acts a lot like the open of the market.
Absolutely. No, you hit that on the head. All right, guys. So it's 10:30 right now. I said we're going to probably do this for about 2 hours. It's been live since 8:30. It's 10:30 now. We're a full 2 hours in.
It's already been 2 hours?
I know. I felt like maybe 10 minutes. It's crazy. I'm having fun right now.
Yeah, I'm just kind of just chilling, talking. I mean, I get why people do podcasts now. I mean,
I could do this all freaking day. This is like a podcast. Yeah, I like it.
It is. It is.
I would say we have time for maybe one more question. A couple more questions if you guys have any. While you guys ask, Tim's asking, what are the easiest setups? So let's do that real quick. Let me take like 5 minutes and let me break down 3 strategies for beginner traders. And the reason that I like these strategies and these setups is because they force you to be a buyer at levels of support versus chasing stocks at high a day or levels at resistance. So do you want to be a new trader that's chasing high a day breakouts and getting caught up in these fake out breakout rug pulls? Or do you want to be the type of trader that's able to sit back, remain calm, cool, collected, and wait for the trade to come to you, and you're buying at or near a level of support, and you know that your stop is right under support? It's very clean, it's very easy, it's very simple. So my 3, and we'll just break these down really quickly here. We have lessons on these, so you guys know. So if you jump over to YouTube, actually these lessons are not on YouTube, my bad. So if you're a member, inside of chat, you'll actually see the boom, boom, bang lesson. You'll see the inverse head and shoulders lesson and the break and retest. And we've actually have these inside the video lessons library for you. But, basically what a boom, boom, bang is, it's a downtrend break strategy at the end of the day. So you have a stock that's in a nice uptrend, right? And it's starting to just pull back. Stock is just literally starting to... Why is this being weird today? Okay. But it's a stock that's literally just starting to pull back into a level of support, right? So, this is a really bad example. I was not prepared to sit here and draw.
Wait, you're not an artist?
No, I'm a day trader. Okay, do this. What I'll do is I'll take these lessons from our video lessons library. I will upload them today on YouTube, and I will keep them open for the weekend. So the three strategies are the boom, boom, bang. That's a brand new lesson that you'll see, right? That is a strategy for a beginner trader. It's simple to master. It's easy to understand. It forces you to be a buyer at support versus chasing the stock at resistance. The inverse head and shoulders formation occurs at or near a level of support. It forces you to be a buyer at support and sell at resistance, right? Low risk, high reward. And then the break and retest. Basically, that's when a stock breaks high a day or breaks a level of resistance. The last thing you want to do is buy a stock as it's breaking and then watch it dump on back down and be a fake out breakout. So what I like to do is teach newer traders is to wait for the breakout to happen. Actually wait for that stock to break that level of resistance. What's that doing? That's allowing you to see if the stock's going to break and hold or if it's going to dump on back down, right? It gives you a chance to let the stock prove itself, right? Versus getting in on that upper shadow and then it dumping on back down. So the break and retest is let the stock break resistance, and then healthy stocks, more times than not, will pull back into that level of resistance and hold it as new support. So you'll see that stock breaking resistance. It might rip a little bit higher and a little bit higher. But nice, healthy, strong stocks, typically, they will start to pull back into that prior breakout level, that prior level of resistance, come down, retest as support. That's where you ideally make your entries, and you get a nice little rebound and a nice little reversal. And that's why I like these, is the stock is strong, it broke out, it proved itself. Now it's coming back down to retest old resistance as new support. That's where you want to make your entries on the retest. But there's more criteria behind it. On that pullback, you want to see decreased selling volume. You make your entry right at that level of support, and you're looking for the bounce and the continuation and the leg higher. What do I like about this? Is your stop loss is right under that level of support. So your stop's really tight, and you have a clear defined target. What's your clear and defined first target on that trade? What's the prior high before it started pulling back? So you have a very clear defined target, first target. If it exceeds, then obviously you need to learn support resistance and identifying targets, but you have a clear defined first target. You have a clear defined stop loss right underneath support. So that would be a low risk, right? Very low risk, right under support, right underneath your entry with pretty good reward back up to the prior high before we saw the pullback for that retest. So that would be a break and retest, right? You're being forced to buy the level of support, and you have very, very nice tight stops, and you have pretty good reward to the upside. But again, I'll take these lessons. They're about 45 minutes to an hour in duration each, and we give you guys live examples. We really break these down really thoroughly, and I would say that's going to be better for you guys is to watch those lessons. So the boom, boom, bang, the inverse head and shoulders, and the break and retest. Those are mine. That's what I like.
And I think the break and retest is definitely the first one that any trader should be practicing, in my opinion, because it gives you basic it gives you basic understanding of how stock will move at a certain level. Break above, pull back, continue higher. If you can literally take one setup and just put the reps in, and that's all you need.
Exactly. And it forces you to be disciplined, right? Because it forces you to wait for the stock to break out. And if you see the stock ripping, it forces you to sit there and be like, well, that's pretty cool. It's ripping and running. And you just watch it. It really helps your discipline. You're not FOMOing in, you're not chasing the stock, you're sitting on your hands and you're just watching the stock rip. But you're allowing it to prove itself that it's actually going to break, it's going to rip. And if it does indeed pull back to that level of support, it gives you time to build a plan. Like, all right, I want to see that decreasing volume. I want to buy at $6. Stops are going to be 580 under support. That prior high is, 650, so I can make 50 cents a share. I'm going to lose 20 cents a share. Gives you time to calculate your position sizing and then accept the plan. And you're prepared. And you're just waiting. You're waiting to react. And the stock's going to either come down and say, buy me, and you buy it based on your plan, or it's not going to come down and you're going to find a different opportunity. So it allows you to be very, very disciplined, and it gives you plenty of time to get prepared as well. And that's another thing about these strategies is the boom, boom, bang, which is a downtrend break strategy, the inverse head and shoulders, or the break and retest. All of those give you plenty of time to build a solid plan and to accept the plan before jumping the gun and just buying randomly. It gives you a good enough time to actually get prepared ahead of time and make sure you accept the outcome of that trade that you may be taking, which that's what we have to do, guys, is we have to build plans on every single trade, no matter what. We need to know our entries, our exits, our stop losses. We need to have reasons to take the trade, multiple separate reasons to take a trade. We need to accept the trade. We need to accept the outcome. If it's a bad trade, am I willing to take a loss? If it's a good trade, is this the right size that I want to take? It gives you a chance to really build those plans like professionals and to accept the outcome. So if you take a loss, you're not mad. You've already accepted it. You've already said, if I get stopped out, I'm losing $100. So if you get stopped out and you lose $100, why are you upset? You already accepted it ahead of time. You already knew that was a possibility. So you just move on to the next trade. All right, a couple more questions.
How do you set a stop loss with calls or puts? Personally, I do not trade calls or I don't trade options. I do every once in a while, but that's not my expertise. And you can set a stop loss in as a good example here. I can show you guys if you are on TD Ameritrade. If you guys didn't know, you can actually have the option active trader. So options chart setup. Share.
We can't see your screen. Yeah.
Yep. I'm there. It is.
Cool.
So I'm gonna go ahead and load up the SPY here.
And I was gonna say real quick while you do that is you set a stop loss the same way you do with equities, right? You just go place a stop order. The only thing is with like a stock, equities, you place a stop loss based on the chart, right? Well, with options, right? I mean, you can't really just put a stop loss on the chart. I mean, you can. There's a way to do it, but it's never like that precise because options, yeah, they correlate with the stock. They move with the stock, but it's not exact, like to the penny. But just to answer the question, to place a stop loss, you would just, if you have one contract, instead of selling, you would just create a stop order and put it at a certain price, and you would be stopped out.
And all I did here was this active trader ladder. This is the option. I can trade options right here. One contract, two contract. This is the call. Now to do this, if you're on TD Ameritrade, what you want to do is actually hold on. Sorry, I just shared another screen. Once you're in the options chain, trade all products on your want. You want to right click and send to, and then whatever I had that other chart as yellow. So I sent it to yellow, and then that allows you to trade with an active trader. Now this allows you this, so you don't have to do buy. I want to buy this, and then I want to buy single, then go down here, make everything all right. It's too long. When you can just look at the active trader, click. If you want to get in right away, you can click buy market, which is very risky, especially if the spread is high for options. But the stop loss, I would say if you're looking to trade options, I would definitely have the active trader open for options.
Yeah, and he hit on that really nice. Yeah, sending it over to the active trader makes your job 10 times easier. You can buy and sell, market, limit, place stops, auto send without going through all the confirmation screens and all that. It simplifies the process. But that's with TOS. I don't know with Webull. Yeah, I don't think you can send options to Webull. I don't know.
You can.
I don't think you can. But But
TD's the GOAT.
It is. I mean, TD's,
Except for
when
orders.
options are good. There's no issues with options with TD. But with equities, oh yeah, the slippage is unreal. I mean, literally 500 shares. It's like partial fill. Partial fill. And I'm like, dude, the stock's trading 50 million shares. I'm trying to sell 500, and you're telling partial, and it's like 20 cents a slippage. And I'm like, you gotta love payment for order flow. You gotta love it.
Yeah, they got to make their money somehow.
Yeah, they do, don't they? They do.
Yeah, well.
All right.
Yeah.
You can send it with a stop and E-trade. Yeah, and most brokers, I mean, I would say every broker, if you're trading options, you can put a stop loss in. It's just how user-friendly is it? Like, is like TD doing it through the options chain? It's not really all that user-friendly. Like, you got so many confirmation screens, blah, blah, blah. But like Cole said, if you just send it to your chart and use the active trader, it just makes it 10 times easier.
It does.
Thanks for taking the time to help everyone. I will be tuning in on Monday. Enjoy the holiday. Yeah, absolutely. Tim, enjoy. John, Ian, Ed, everybody. Thanks for tuning in. Thanks for being here.
Sure.
And I'm glad that you guys had some fun. I mean, I enjoyed it. I always like helping others and dropping value bombs and educating you guys up. So yeah, I guess I'm good. If you guys are good, what about you, Cole? Ready to?
I think we hit everything on the head. Especially since we winged it. I think it was a pretty good.
For winging it with technical issues, yeah, I think it was pretty solid. So yeah, I know a lot of you guys are asking, Josh, when's the next time you're opening up more seats? Well, I went ahead and did that. Thought about it over the last week or so. I was like, I'll do it for Easter. So if you guys have any questions, you can shoot me an email anytime, josh@alphadaytrading.com. Or if you guys are like, all right, cool, I've just been waiting for a registration to reopen. I know what to do. You guys know what to do. We would love to have you a part of the team. Love to work with you like this all day, every day, not just in the mornings and whenever we have time to do this outside of market hours. But again, if you guys want to join, become a part of the team, you will not be disappointed because I guarantee, I would say like 99% of members in chat would be like, yes, it was the best investment for my education I've ever made. It's crazy the emails that I get and the comments that I get. Just that's why I love doing what I do, man. That's really is what it is at the end of the day. What fires me up and gets me out of bed is seeing people in chat just make money. I mean, which is just amazing. The fact that I can help them make money, and it's just like every single day the same traders over and over and over, just consistently posting profits. Not one a month. It's not one a week. It's like every single day we have traders just posting profits, and it's just
fast.
It's a good feeling. It's a great feeling knowing that I'm in a position where I can help others learn the market and help them change their lives. And those are the comments I've gotten. Like, Josh, dude, you've helped change my life. Josh, if it wasn't for you, I wouldn't be where I am today. Josh, where have you been at for the last 4 years? Josh. But yeah, that's what fires me up, and that's why I love doing what I do, guys. So I'd love to see you guys in Profits chat, posting up profits like Corey, like Dougie, like Catherine, like Steve, like every trader inside of chat. Get you in Profits chat, learn what it takes to make money consistently, right? Keyword consistently. But again, I love putting all these streams for free in the mornings. When we have time to do these, I'm always going to be here to help you guys out. Not just in chat, but outside of chat as well. And again, if you ever have any questions, hit me up, shoot me an email, and I'm always here to help you guys out.
Cheers. Have a great weekend and good holiday.
Spaz, what's up, buddy?
Yes.
You're late to the party, dude.
Got some energy.
We're leaving now.
Yes.
We're leaving. But Spaz, ladies and gentlemen, quick announcement. Spaz, very, very soon. Cole, very, very soon as well. You may start to see new rooms on the Alpha Day Trading platform. So not just the Alpha room, but we may have some other members and traders in chat opening up their own rooms. So if you get sick of hearing me talk a lot, you can go watch Spaz trade live. Maybe you can go watch Cole trade live and other members that want to open up their own streams as well. So just kind of be mindful. If you start seeing other streams opening, you guys will get access to those rooms, to their streams, to their trades, to their chat rooms, all that cool stuff, to where it gives you a little bit of a mix, right? You can change it up a little bit, especially if you don't like seeing my beautiful face every day.
All right, guys. I know I needed something to switch up. I mean,
I would like to join your Discord, but I'm usually working. So yeah, and we don't have a Discord, guys. So I guess I would call it like my own Discord in a sense. So we developed a live trading platform, guys. And this is where we work all day, every day, is at alphadaytrading.com. It's the app that we developed. And again, live stream, chat rooms with members, video lessons library. We post our morning stock newsletters. There's a lot of stuff, right? So again, for those of you wondering like, hey, what's your Discord? We do not have a Discord, right? So you just join us over at alphadaytrading.com, get access to the platform, and you can work with us all day, every day.
Sounds good.
All right, man. So if you have any final words, if not, then we'll go ahead and enjoy our Friday away from the market and enjoy our holiday weekend with friends and family. And we'll see you guys back here bright and early Money Monday.
Awesome.
I love it. All right, guys, take care, and I'll see you guys Monday at the start of pre-market. Take care, guys.
See ya.
See you, man. Mini meetings for me today. Join the team Alpha Day Trading. Change your life like I did. That's amazing, man. And that really, that put a huge smile on my face for, multiple days when we had that conversation. Like, dude, you changed my life. I'm like, I love hearing that because that's why I do what I do. If I'm not helping people, I'm doing something wrong. If I'm not helping people, then I don't need to be doing what I do. But the fact that I've just seen so many members succeed and just, I don't know, it's a good feeling. I lose words sometimes because it's just a really good feeling at the end of the day. But I love it, man. I love it. So, all right. I'll see you guys Money Monday. Take care. Have a good one. Thank you guys for joining us. Like I said, I hope you had some fun, that you learned something. Maybe it was a nice little refresher. Like I said, man, market's closed. Who cares? We're here, dropping value bombs, getting you guys educated because I love y'all and I want to see everybody succeeding in the market. So have a good one, guys. Take care. Have a blessed weekend. Have a fun weekend. And I'll see you guys back here at the start of pre-market. At what time? 7 a.m., baby. Take care, guys, and I'll see you later.